Hello, everybody. Welcome to the official Tesla Q3 2024 earnings stream. This is going to be a very, very important. Tesla is kicking off the first of big tech earnings. We had Netflix. Netflix was good, but Tesla's one of the first ones of the Max 7. So it's going to be a very, very important stream to get started into what big tech earnings season is going to look like. Next week, we got a lot of the other Max 7s reporting. So Tesla is kicking it off. This is going to be an important one for a lot of reasons. I think the number one reason is Tesla was obviously just at $260 like 2 weeks ago. Big 10-10 event was supposed to happen on 8/8, got delayed to 10-10. Happens. I think pretty much every single bull that is relatively objective about Tesla could say that the event was a bit underwhelming in terms of the amount of details we got, although it was very visionary and revolutionary in terms of what Tesla is trying to achieve when it comes to autonomy and robotics. The stock since then went from about 270 or 260 to about 220. On the day it's at 213. One of the worst days for the S&P 500 since September is happening today, the day that Tesla reports. I think there's a little bit of pre-election jitters that are going on right now, some general profit taking, and also some people that are saying, you know what, we're not really going to start buying again until you show us that big tech earnings are on the right trajectory. So that is why this is going to be a very important stream to see kind of what happens, how Tesla plays it out. And we got about 28 minutes until we get the results. We're going to have an hour to analyze the shareholder deck when it comes out. And then we will have the earnings call and we'll see what Elon has to say. By the way, Elon's right now tweeting about politics. And so he has the earnings call coming up in like an hour and a half and he doesn't care. He's tweeting about Kamala Harris. So it is what it is. All right, let's bring on some guests to help me analyze what's going on in the world of Tesla. Someone who has held Tesla since 2018, Mr. Couch Investor. Neil, what's up?
Hello. Thank you for bringing me back. I think we've been doing this now for 3 quarters in a row, and it's been up and down. So yeah, exciting times.
It's going to be pretty damn exciting. So I'm going to put the official poll in the chat, which is the pump or dump poll. By the way, guys, we also have some other earnings. So before Tesla reports, which usually takes a couple minutes to get their numbers, we're going to have other earnings that are very important. One of those being ServiceNow, which is a big IT spender. That'll kind of give us an understanding of how software spending is going throughout the entire industry. So Neil, let's start off with that. Dump or pump polls in the chat. You've held Tesla for years. Do you think we dump or pump today?
Should I don't know what I should say. I want a pump, but I can see why it would dump, even though we're down quite a bit since the 10-10 event, which we also covered, and we were like having some mixed feelings around that. But it would not surprise me. I mean, the reason why it would dump is if margins are worse than expected, and if maybe guidance has changed a little bit with the next generation vehicles. If that comment suddenly disappears from the shareholder deck, that would be less bullish, let's say.
So if you had to pick, you think it would be dump versus pump?
Yeah.
I'm going to go the opposite. I'm going to say pump off the sheer basis that we've already dumped so much from 260 that I feel like any good news, which is, we know the numbers are going to suck, and we'll talk about the numbers in a second, but any level of upside on the numbers that's a bit different than what the street's expecting, maybe they give them the benefit of the doubt. So let's get into the numbers themselves. What exactly do you think these numbers are going to look like from an EPS perspective, a margin perspective, revenue perspective? We know they delivered about 463,000 cars. And do you think there's any chance for any segment of the business like energy to surprise to make the stock, not find its way below 200?
I mean, yeah, since we got the production and delivery numbers already, we also got the energy numbers actually, which gives us a little indicator. But yeah, it's not as good as last quarter, but year over year, it's still up significantly. So that's good. Regulatory credits, I mean, that always plays a part, right? When it's high, it's good because it helps the business. But then again, you want the business to succeed without it. So yeah, that's not great, but we don't know. We don't know what's going to happen. But energy should be fine. Services should be fine. The automotive part is what I think most are worried, despite a good quarter especially in China. But then again, the margins aren't as high there as in the United States, for example, or even Europe.
So, do you know what the current gross margins are for each car?
For each car, no, but I think last quarter automotive gross margins were what, 14.6, I think, or something like that. If I'm not mistaken, maybe I am mistaken, I don't know, but it's around that and has been coming down significantly in the
Yeah,
last couple of quarters.
so I'll pull it up
yeah,
right now. This is what we got. So automotive gross margins were, or total gap gross margin was 18%. You might be right that 14% is for the automotive. So do you think that bottoms, or do you think that can go lower?
I mean, if it bottoms, that would be great, right? Because now we're entering a stage of lower interest rates. Plus, I believe we're going to get even lower in the next coming quarter. So that's helping. So yeah, if we bottomed, I think that would be viewed as bullish.
Yeah, I agree. I think the bottoming of that is going to be very important for us to get a little bit of momentum on the stock. The problem is that 10-10 event, so let's transition to that, was a bit underwhelming, at least from my perspective. And the whole narrative story of like Tesla's going to change the world, it's taking a back seat because it's just not happening anytime soon. So given that, if there is not any upside to the numbers, whether it's margins, energy, etc., we might have a little bit more of a delay. Let's also bring on someone who's going to be helping us analyze everything going on in the world of Tesla. Mr. Vince is bullish.
Hello, guys. Third wheel here, ready for your podcast.
Vince, your name is Vince is bullish, so I'll start off with this. Are you bullish about Tesla, given you sold out of Tesla in January?
Yes. January 2020, was it 2024? Anyways.
I think you sold it around 250. That's where you kind of exited.
220 I exited. 220. And I felt like the stock wasn't going to go up. Like there was more downside to come for the stock, and I was partially right. Like at least it didn't go up. But now I'm back as a Tesla bull. I'm trying to find a way how to get back into Tesla. I wrote some puts, $200 puts.
Was it a good premium? Did you get a good premium on those? Is it decent?
I was happy when I did it, but since then the stock fell, so I could have gotten a lot more for it. But I don't know. I'm happy with it.
Yeah. Okay. So let's talk about 10-10 then. And all three of us were on the stream of 10-10, but I want to use 10-10 to transition into what we expect from this earnings. Now that you've had 13 days, because 23 minus 10 is 13, that's called quick maths, baby. Now that you've had 13 days to reconcile 10-10, Vince, what were your raw thoughts on the event?
I think that Elon did this event to get to change up the stockholder base. I don't think he wanted the stock price to go up. I think it's more like the people who are here for the short term, please sell the stock. This is the future of the company. And then if you don't like it, don't be here. And if you like it, then, this is the future. And I very much like it. Like I see that the company has because when I sold the stock, like I didn't see that they had a future. Like everything was just a problem, and they were scaling back on their production increase. FSD was not going good, and now I see that there is a clear direction. It's not fully clear which dates and how exactly we get there. But in hindsight, very happy with the event. Hoping the stock tanks so I can build up a juicy position.
Okay, Neil, what is your 2-week synopsis of 10-10?
Yeah, so during that event, I mean, both of us were less, let's say, excited because we were expecting a bit more. And I think that's the thing. When I showed it to some friends, they were all like, whoa, this is crazy. So I think because me and you, Vince, and some others, we were like, each and every day, Tesla this, we know every single thing that goes around. So we were expecting more. And so when we got the event and we saw everything, we were like, okay, cool. But we knew this was coming. But then if you take a macro, let's say you zoom out and you're not someone that pays so much attention to Tesla and you look at what was announced, you're like, whoa, this is actually crazy. Right. This was actually a pretty cool event. So yeah, I think it has grown on me, but then again, it's still things that will not happen until 2026, 2027. So to me, I'm still waiting for the next event, which should reveal maybe the next generation vehicle, or maybe they'll just do a tweet and so, oh, this is the Model 2, this is the refresh Model Y, have fun, order available right now. Bam.
I agree. I think the couple nuances here, and this is where you got to give Tesla a little bit of grace here, is that they couldn't really announce that many details because they're still trying to sell the Model 3, the Model Y, etc. And if they gave way too many details about something that's coming up, it's kind of like the problem we have with housing in America right now. No one wants to buy a house because they know mortgage rates are coming down. So if you know this beautiful new car is about to come out, which is 25, 30K, why would you spend 40 to 50K on a brand new car versus wait it out? So I think that's fair. And then the event itself, Optimus, there were obviously some rumors that it was being controlled in the back room. It wasn't fully autonomous itself. FSD, some big YouTubers like MKBHD, they said, hey, we were kind of just, it was a 5-minute little racetrack. It wasn't that exciting, wasn't that interesting. So I think a lot of that media got in the way for the investor class and for Wall Street to kind of think that this is the future and this is super revolutionary. But then if you show it to the average Joe, they're looking at this like, oh my God, this is the future. This is revolutionary. And this earnings, I think, is going to be a debate between the regular person that believes Tesla's changing the world versus the investor class that's like, these numbers just aren't enough to justify a $800 billion market cap at the moment. And so I guess we're going to see kind of how Elon navigates this. Here's a question from the chat that I think is a important question from Doug. By the way, the poll we have, 440 votes, 63% of you say dump, 37% say pump. So still a little bit more bearish than bullish. Are we going to get happy Elon, grumpy Elon, or political Elon on this earnings call? Vince, what do you think?
Definitely political Elon. I mean, he went all in on Trump. And I think if he doesn't win, he's going to like end in prison or something. So he's, and I think, I don't know, he made this bet. So it is what it is.
Okay. Neil, he didn't answer any questions on the Tesla 1010 event. On earnings, he doesn't want to answer questions until we get to product events. So do you think we're going to get any real juice out of him by like getting real details?
So first of all, I'll say I don't think we're going to get political Elon because we haven't gotten that side of him during earnings call. I think he knows he on earnings calls he should maybe keep his mouth shut when it comes to that. But yeah, I would really hope we get question answering Elon and not just, oh, if you're buying Tesla for the car business, you should sell it because we are an AI company, autonomy company, etc., etc. Okay, fine. Bullish investors know this, but he still has to talk to Wall Street. I know he doesn't like to talk to Wall Street, but I mean, maybe give us a little bit of guidance because usually they don't. But maybe he knows something we don't. Macro-wise, how are things evolving? That would be great. I don't think it's going to be grumpy Elon unless the questions are always the same and the questions are political. Because if the analyst asks political question, then of course it will turn into a whole circus show. But
okay, so this begs the question: if you're an analyst, do you have the balls to say, "What is Tesla's future like if Trump loses?" Because that's a legit question. I think it's a legit question, but would you actually ask that?
I think maybe one could ask it, and I think the answer would be pretty simple for Elon. He's just going to say, look at what has happened in the last 3 years. Was I invited during some summits or was I not invited? And voila, boom, next question. Thank you very much.
Vince, any thoughts on that?
I mean, I think he's like, yes, the last 3 years, but also like they're already starting with the lawfare against him, like checking if this Pennsylvania, giving people 1 million, if that's legal. And I think that would greatly intensify. And I don't think, I mean, he went all in on Trump. I don't think a Kamala win would be would be good for Tesla, basically.
I actually love Neil's answer. So Neil, I mean, like if someone did have the balls to ask that, which if I was an analyst, I wouldn't ask that. I mean, that's a little scary to ask. But if I asked that, even though I think it's a legit question, I think he could just say, yeah, the current administration doesn't embrace me. I'm the guy leading the EV revolution. And they're saying Mary Barra is like, the queen of EVs. And that's something that will continue if a Kamala presidency happens versus the opposite if a Trump presidency happens. So I think it's a very reasonable take by him to answer that and then just move on. He doesn't have to get into all of his reasonings for voting for Trump.
Amit, I'm sorry for this. Amit, I'm sorry for this question, but I'm blinded by something on your finger. What is that?
Oh, I got married, dude.
You did? Oh my God. Is this fake gold from India? Did you buy it from a guy on a rickshaw who was like, I promised gold ring $3?
No, I'm married
on
to
the tuk-tuk.
I'm married to the game, bro. I'm married to the stock market. This is the game.
Is,
That's it.
is that actually gold?
No, it's
is
real
that
gold.
is that your inflation hedge? This is like this is
You know
like
what?
guys, I'm all in on stocks, but I'm hedged.
So my dad had an old gold ring from like 20 years ago, and we melted it and just made it into a ring that I would actually want to wear. And because the price of gold has gone up, we were able to basically get this for free. So I used to have a gold ring a couple years ago, but then I kind of lost it, and so I've been ringless for like 4 years, and so going back to India, we got
You know what you should do, huh? Engrave Palantir in the ring, Lord of the Rings.
Yeah. Oh, that's a good one.
Ooh, that
That's
is a good one.
That's
That
a
is a
good
good one.
We need to. All right, let's get back to Tesla. This is what we got to keep talking about Tesla. So let's let's go to this. There's one sentence in this shareholder deck that's going to come out, which if it's not there, I think all hell is going to break loose. So this is from the Q2 deck, and Tesla wrote, plans for new vehicles, including more affordable models, aka $25,000 vehicle, remain on track for the start of production in the first half of 2025. If you had to bet your life on if this sentence would be in the deck again, meaning first half of 2025, which is literally in 2 months, will start production on the next gen vehicle, would you say yes or no if your life was on the line for that? Vince.
I hate these questions when people ask these, but it would never happen that my life is on the line for this question. But I think that line will be in the deck, because my conspiracy theory is that basically the cyber cap that they showed is basically like the Model 2 without the pedals and steering wheel. I think it was also in Walter Isaacson's biography that like the two vehicles is being planned on the same platform, and because of, like, obviously they showed off the cyber cab, so they're very, very much finished with the designs and everything. So I would be surprised if this line wasn't there, but nobody's gonna put a gun to my head. I'm safe. Okay.
Okay. Couch, you think this line's gonna be there or not?
Yeah, I think this line is going to be there. And to be honest, they might play it like the Tesla way, right? Even if they're not on time, they'll say, oh, but this is what's actually the Model Y refresh, right? It's a new model, maybe a little bit more affordable, etc., on the new production line, if they're late. But I still fully expect a new model in the first half of 2025. And if it's not there, then yeah, we crash.
Do you agree with Vince that the new model will just be the Cybercab with wheels? With this, like, a steering wheel?
It would make sense to make it. I mean, I wouldn't mind. Looks great. So if that's the affordable model, great. It's the same line. I mean, most, if not all, the new vehicles will be on that next generation line. So yeah, why not? Why not? It would make sense, would make it super easy to then update it to a robo taxi. So yeah, cost efficient.
Yeah. You could scale up the production before you start making your own cyber cabs, and it has Elon Musk written all over the plan.
Yeah, because the plan is to turn those vehicles with FSD unsupervised into robo taxis anyway. So I mean, why not?
Yeah, I would agree. I think it's I think it's gonna be very important for them to keep this sentence and for them to have some resemblance of it. Now, I think if people ask, hey, what does this next gen vehicle look like? You could argue that Tesla doesn't want to give the details again because they're trying to make their Q4 deliveries. And so they might be light on details, which Wall Street might not like. That could take a hit on the stock, but I guess that would be, not the worst buying opportunity if they are on track for H1 production.
Another really weird twist of fate could be that the line is in there, but the guidance that they give is like it's going to be very limited in production, because keep in mind that they were going to build a factory in Mexico, right? And then they scaled that back and they said, no, we can begin it in Texas with all the engineers, like we can get the production going in Texas. But I doubt, or I have doubts on like how much production they can get
No, I think they can, because right now the capacity is what was it, 3 million or something like that, and they're nowhere near 3 million, right? For this year, it's going to be what, maybe 1.8 if we have over 500,000 in Q4. So to reach full capacity, they have enough with the existing. production
Yeah,
lines.
yeah. If they can 100% run it on the existing production, like that's the big question mark for me. Like how, like, do you need like a whole new? So they need to like wall off the factory and okay, like this side of the factory is the Cybercab and everything is on new lines, or they can reuse the lines or most of the lines of the Model 3 and Y.
Yeah, don't forget that Austin is it's a new-ish factory, which they expand over time as well. So I think, I mean, in Austin, it makes sense, right? It makes sense. The most modern, let's say, factory that they have. Plus, there's going to be for sure Giga Shanghai that will pump out new Model Ys next year, in my opinion.
Yeah.
So it seems like my family is getting very close to getting the Model Y, given the 0% APR. Not confirmed yet, but it looks like it's going to happen. Do you think it's bullish or bearish that they're doing this 0% APR for Model Ys and Model 3s?
Only if you get FSD, right?
No, it's without FSD. You don't need FSD.
Now it's without?
Now it's without. Dude, 2 days ago. That's why my dad's really getting excited for it, because
that's interesting.
I don't know if it's bullish or bearish. Like for sure, it's not good for the margin. But if they're selling a lot, then I guess Tesla needs to pump out a lot of cars if they're going to turn into. Like I have a model, right? And in this model, it's very much based on the Tesla becomes a full self-driving company, and they get income from the FSD subscription. But
Correct.
their TAM is only the cars that they have sold, right? So theoretically, and if you think very long term, it's better for them to sell the cars cheaper and have a lot of cars out on the road, so that when the FSD is ready, they have millions more cars that can be customers, right? So I think it's somewhere bullish, but have just a recommendation. My mother-in-law just bought a used Model 3 for, it was like half the price, and you like cannot tell that the car is used. Like,
dude, I tried to task my dad about getting used, but he doesn't. I don't know. Maybe it's a pride thing or something. He won't buy a used car. It is what it would be really cheap.
He should do the math of like $60,000 in a car that is like 40,000 next year, or 30,000 in Tesla and 30,000 in a used Tesla, like the stock Tesla. And yeah,
I agree. It's one of those things where he's 60 years. He's not going to change at this point. So
and if you even want to go better, then 30,000 in the used Tesla and 30,000 in Rocket Lab. Test that one. And no, I'm kidding. I just had to say that.
Rocket Lab's at 11. Our boy Vince is gonna retire off Rocket Lab. He's never gonna show up to streams. He'll just be in the comments off of a beach with Turks and Caicos, just hey guys, you guys still talking about Tesla? Rocket Lab retired me. I don't know why you're still talking about Tesla.
Yeah, I definitely have the YouTube sickness. So I like too much doing this and the community, and so I don't think I will be alone on the beach. But like Rocket Lab, I realized actually this week that it has been quite life-changing for me for a different reason than you think. It's because it gives me so much, how do you call it? Like I can write options. Like, this is going to sound bad, but I have a way to start selling options the way I plan to do it a lot sooner than I thought that it would happen. Let's just leave it
you can sell a shit ton of covered calls, is what you're saying.
No, a shit ton of puts, because I have so much like buying power now because of Rocket Lab that it's pretty crazy.
Not bad. All right.
Yeah.
After the bell, we also have Lam Research, ServiceNow, IBM, and T-Mobile. So if we don't get Tesla immediately, we'll look at those companies. Let's get a little preview from Dan Ives, what he's thinking about earnings, and then we'll go from there.
I was actually with Optimus probably for an hour, making the drink, selfies, conversation. And my whole view of the Tesla event is, look, if they produce autonomous next level of FSD, the next 4 or 5 years, the $1 trillion market cap, because of where I view the ultimate market, because I think FSD to me is probably the best use case of AI. When we think about globally and even how Waymo is attacking it, but you got to start to deliver.
Yeah.
So when you talk about this quarter, it's not about revenue. It's about, if margins is sub 15 and you don't feel like it's bottomed, for the stock, it's hard in the near term. until they give you that confidence level. Now, I believe, I hope, and all of our numbers show that gross margins, auto, X credit should start to bottom. And this should actually, you should start to see like north of 15% number. Okay. That tracks back toward high teens, 20%. Going back to your GM example, if this is it, in other words, like if we just stay as a teenager, 10th grade in high school, the stock doesn't get re-rated regardless of everything else.
Right.
You need for that to work to have a 2 in front of auto margins, X credit. That is something over the next year that it's not a matter of it needs to happen. If it doesn't happen, then at that point, they give the bears fodder. They give the bears.
Well, they
meat on
already
the bone.
are. I mean, like, so you could make the argument that Tesla has made one of the biggest mistakes you could possibly imagine if you think about just the economics of selling product, right? They believe there was price elasticity as it relates to their cars. Okay, so this started in late 2022, right? They started actually even before that, right?
Started actually
Yeah.
like 21.
Yeah.
A little,
And they started lowering the prices, and the more they lowered the prices, the more the competition did. And then the China issue is huge because they sell much cheaper cars. They have much better range. They're more, I think they were more attractive, you know what I mean, to a Chinese consumer.
And if you went to a restaurant where the prices went down every day, you're like, let's wait till next week where the price is going to do.
So that to me.
So thoughts on that? Do we kind of agree? We got to have a 2 in front of the margin story for this to start working out effectively?
I mean, over the long run, yes. Now I think a bottoming would be enough, I would say. So yeah, but he's with regards to the pricing thing. I mean, I wonder if Tesla would, if they did wait a little bit longer, what that would have done for the business, because they started cutting prices left, right, and center super fast. And they really did not advertise the fact that, oh, Teslas are cheaper than the competition. I know, despite that, Model Y was the best-selling vehicle in the world last year. Okay, cool. But, I mean, why not advertise a little bit and make sure you're selling even more vehicles? It's not really going to cost them that much. What will cost them more is every time they do lower interest rates to 0, for example, right now, that's probably costing them a couple of $100 million a quarter. Why not spend that on advertising?
Right.
Is the question.
By the way, Peloton is up 11% just now because David Einhorn said the company is undervalued. So there you go. Peloton's up 11%. We got about 1 minute left until the earnings call. Vince, or not till earnings call, until we get the numbers. Final raw thoughts. Oh, pump or dump. I didn't ask you guys. Vince, pump or dump. What do you think?
I heard what you said, and I kind of agree with you that we have been dumping so much lately that I think it would take very little to actually pump the stock. I think that the only way that we would dump is if they don't give any guidance or even bad guidance. So I think that after the event, the people who don't believe that Tesla is going to solve self-driving and is going to be a robotics autonomous company have sold the stock, right? And the ones that are in it for that story, I think as long as they hear that, okay, we're on track, you know, these are the steps that we're going to take, even if it takes a year or 2 more. I think that those guys are going to show love for the stock.
All right. Neil said pump, Neil said a little bit of a dump. I said a little bit of a pump. So let's see what happens. What did you say, Neil?
It's now it's right under the 200-day moving average. So interesting.
So, let's see what happens. 4 p.m. Wednesday, October 23rd, ladies and gentlemen. The stock market is now closed and we enter into Tesla earnings. All right, now we wait, and we just stare at these candles go up or down. Vince, you got to send me some of these glasses, dude. I need
Amazon, $50. It's really good.
50?
50 is a little
50,
expensive.
yeah.
50 is a little.
50 is expensive, man. If you go on Temu or AliExpress, it's probably like 5.
Yeah,
No,
I was looking
no,
for it.
Vince is a Rocket Lab like billionaire. He doesn't need to worry.
Yeah,
about
that's
it.
true.
I was looking for it. I didn't find this quality where I can control this via an app, and yeah, the amount of laps it gave, I'm happy for it.
All right, so we are waiting, folks. If you guys get the numbers immediately, let me know in the chat. I am refreshing here. It usually takes till 4:05, so we will see what happens. It is an interesting day for them to report. S&P was down about 1.5% for the day, the first red day we've had really in 6 weeks. So one of those days where I think the market's getting ready to kind of give back a little bit of their gains, and now we're going to see what Tesla puts up in terms of numbers. Yeah, S&P ended 577.93.
I was, by the way, so annoyed on this market. Like, it's one of the most resilient bull runs I've ever seen, and I was like so much looking forward to a red day. I think something is out. No?
We are moving just a little bit after hours. I have a bunch of my sources open. I don't see any results yet. We should be getting it pretty soon.
Oh, green.
No numbers yet. No numbers yet.
Nothing.
Usually
the Lamb
405.
research is going to be interesting as well. I don't know if many folks are following that, but after ASML and TSMC, it's going to be interesting if this one is more bullish.
So we got T-Mobile up 2%. So T-Mobile, but by the way, put in the chat if you own Tesla. I didn't get to ask that question. Put in the chat if you own Tesla. I'm going to close the poll in like 2 seconds. We got 1,400 votes. 60% of you say dump, 40% say pump. So majority of you are a little bit more bearish on this Tesla earnings, but T-Mobile's up 2.74%. Verizon was down a little bit, but Verizon had decent numbers, so it makes sense that T-Mobile's up. IBM up a little bit. ServiceNow, Lam Research, no numbers yet, and we are still waiting on Tesla. We got Scott Smith with 12,000 shares of Tesla. Katie has some Tesla. We got Myra has Tesla. Blake has Tesla. Paulzilla has 230 shares of Tesla. Yeah, if you want to put how many shares you have of Tesla, put it in the chat as well. How many shares you own of Tesla stock as well. I own Tesla, but already sold 80% of it at 260. You know, this story I've been hearing by a lot of people that they've been selling on the pump to that 270 52-week high. I did have a friend who bought 200,000 shares at 240, so he's kind of hoping it pumps back to that level right before 1010. But let's see. Oh, we're green. We are up 2%. We're up 2%. We're up 2%. We are green on the stock, 223, up 4%. We are up 4%. Neil and Vince, if you could try to see and find the numbers, we are up 4.5%.
Nothing.
On Tesla, we're getting a little bit of a pump. Let me see if I can refresh and get numbers. No. Don't have anything yet on my. Oh no, I don't. Wait, do I? No, I don't. Okay, so nothing yet. 3%. So initial reaction from the people who got it, that currently seeing it, probably like hedge funds, etc., on the Bloomberg terminal, they're positive so far. If it quickly wicks right back down to 213, then something was up, but it looks like it's holding.
I don't know. There are so many accounts on X that put out numbers. I don't know if they're true, if they're not. They're verified accounts, even with a golden badge.
Okay, so this one looks legit. 72% on EPS, if this is correct. That's a big beat. Revenue,
yeah, that's 20... what I also got.
Okay, so it looks like that's accurate. Guys, it looks like we got a 12-cent EPS beat, which is great. Revenue miss of about 200 million, 25.18 versus 25.37, which is not that bad. That's not that crazy at all. The EPS beat, I think, is most important. The EPS beat kind of, oh, wow, now we're up 5%. The EPS beat to me signals margins bottomed last quarter. That's what I'm getting from that current read right now.
Yeah, but we want to see the automotive one.
Correct.
Because I think the other one was already up quarter over quarter, if I'm not mistaken.
That is correct. Yeah, you are right about that, about the gross margins. Do I have the deck? I do not have the deck yet. I don't think anyone has the deck.
No. Hard refresh. Nada.
It looks like the margins are going to be good. LRXE, Lam Research is up 5% as well.
It's out. I can see it.
Okay, let me pull it up. Vince, I don't have it.
Do you want me to share?
Yeah. Yeah, share your screen.
This never happens. It's always you guys who get it before me.
IBM up 0.5%. No, IBM's down. T-Mobile's up 4%. ServiceNow is up 0.5%. Tesla's up 4.2%. Lam Research up about 4%.
I
Okay.
should have bought
Here we
Lam
go.
Research.
Here we go.
So
Yeah, let's take it step by step and go through it. So I'll give a little bit of a read. So let me read the summary. We delivered strong results in Q3 with growth in vehicle deliveries both sequentially and year-on-year, resulting in record third quarter volumes. We also recognized our second highest quarter of regulatory credit revenues, and other OEMs are still behind on meeting emissions requirements. Our cost of goods sold per vehicle came down to our lowest level ever at $35,100. Not bad. In order to continue accelerating the world's transition to sustainable energy, we need to make EVs affordable for everyone, including making the total cost of ownership per mile competitive with all other forms of transportation. Preparations remain underway for our offering of all new vehicles, including more affordable models, which we will begin launching in the first half of 2025. That doesn't say producing, that says launching. That's a big deal. I feel like that's a big deal. At our We Robot event on October 10th, we detailed our long-term goal of offering autonomous transport. The energy business achieved another strong quarter with a record gross margin. Additionally, the Megafactory in Lathrop produced 200 megapacks in a week, and Powerwall deployments reached a record for the second quarter in a row as we continue to ramp Powerwall 3. Despite sustained macroeconomic headwinds and others pulling back on EV investments, we remain focused on expanding our vehicle and energy production lineup, reducing costs, and making critical investments in AI products and production capacity. We believe these efforts will allow us to capitalize on ongoing transition in the transportation and energy sectors. I mean, it seems decent. Like,
not too bad.
Okay, Couch, you want to go through these numbers and kind of walk us through them and see what you're seeing here?
Okay, let's see. Let me just zoom in. Okay, so we got total automotive revenue up 2% year over year. That's normal. I know still not that higher growth, but that's fine. Energy generation and storage revenue is up 52% year over year, a bit lower than last quarter, but we knew that from the numbers we got a couple of weeks ago. Services is up 29%, still an underrated side of the business that should continue to grow as this business scales up. Then we've got total gross profit up 20%, reaching close to $5 billion. So that's great. And then total GAAP gross margin, 19.8%. So that's up 195 basis points.
That's not bad.
Over year. That's not bad.
Tesla stock is up 8%, folks. We're at 230.
Oh, I look at this. Operating expenses is down 6% year over year, even quarter over quarter, that's down. Operating margins 10.8. Well, what the heck happened here? 10.8%, that's up 323 basis points year over year. I mean, last quarter we're at 6.3%. So yeah, huge improvement quarter over quarter, which I did not expect, but I'll take everything I can get. So yeah, we got EPS GAAP 62 cents. That's up 17% year over year, and then non-GAAP 72. Okay. Okay, CapEx did increase by quite a lot, actually. CapEx by quite a lot.
That's all those NVIDIA GPUs, potentially.
Yeah, up by 43% year over year, but free cash flow is up. Okay. The year over year comparisons is a bit strange, but free cash flow was up. I mean, what was it?
So that's how they did it. That's how they did it. They just took the expenses and they book kept it as what did you call it? R&D? No, what did you call the?
Which one? The operating expenses or the capex?
Yeah, capex, exactly. Sorry. So they took because I'm like to have such an increase. It's quite remarkable that the operating margin increased so much, and they didn't have like a line of firing. The sales price of the cars were lower, so I wonder if it's the
wait, hold on, Vince. What is your theory for why operating margins went from 6.3?
I was making it a joke that they took the expenses that were in the company and then they book kept it as capex because then it doesn't count as expenses, like a fast handling to increase your margins.
Vince, we're trying to be serious here. How the hell are operating margins up 323 basis points? What the hell happened?
I was half joking, but yeah. So that could be one explanation that they changed something on the book. Because to have such an increase, it's either the regulatory credits were like super
Yeah,
much.
but go down. It explains it more on the revenue and profitability.
Let me go down.
Oh, I just got the deck. Sorry, let me share.
Yeah.
It here now. I just
Yeah.
got the deck.
So here it basically tell us revenue-wise, higher FSD revenue recognition year over year.
Oh, you think that's it? You think that's doing it?
That's for revenue. For profitability, what do they say here? Lower cost per vehicle, including lower raw material costs, freight and duties, blah, blah, blah. Growth in energy, higher FSD recognition. Again, that helps definitely. Growth in vehicle deliveries, higher regulatory credit revenue. Okay. Decrease in operating expenses. And then a hit is reduced sexy vehicle ASP. So the price went down, yeah. But overall, these are the many reasons why profitability and revenue are up.
But I just want to say that my conspiracy theory was partially correct, because when they say that FSD revenue recognition, it's basically like money that they have received in for FSD that is already in the bank, but they could not bookkeep it as revenue. And then I guess because new features came out, then bookkeeping wise they can just reclass it as revenue, but all the costs were in the So I was semi-correct with my conspiracy theory.
Yeah, I mean it's like backlog.
Yeah.
You recognize it in the next 12. Yeah. So I mean, it makes sense. You play around with the numbers. You make it seem better, but I mean that's the Wall Street way. So screw them.
Yeah, and I mean they did have an event. They did release a new. So it's also logical. Like if
they launched new software updates. It's now available for Cybertruck. You got new features, etc., etc. So okay, makes sense.
Okay, so that's one thing that's bullish. Now let's try to get that sentence of production before we get through the rest of the numbers. Product plans for new vehicles, including more affordable models, remain on track for start production in the first half of 2025. There you go. So looks like we are going to be getting a $25,000 car probably by the end of 2025, if not early 2026, but the production will start. And it looks like this sentence hasn't changed. Our purpose-built robotaxi will continue to pursue a revolutionary unboxed manufacturing strategy.
Wait. Keep that open. I want to check something from last quarter.
We have sufficient liquidity to fund our product roadmap. This approach will result in achieving less cost reduction. This should help us fully utilize our current expected maximum capacity to close to 3 million vehicles, enabling more than 50% growth over 2023, which is not bad. These vehicles will utilize aspects of the next generation platform as well as aspects of our current platforms, and will be able to be produced on the same manufacturing lines as our current vehicle lineup. I mean, look, that's what we wanted to see.
Yeah, no, that's a good report. Supercharger stations are up 20% year over year. Supercharger connectors 22%. I mean, that's money-making business for them that is growing above 20% each and every quarter for now. So that's great.
That's not bad. Shout out to Julian for the 100 euro. See, I was gonna say it. I was not gonna say pound. I was gonna say euro. Thank you, Julian, for the 100 euros. Really, really appreciate that. He says, "Congrats to all shareholders. When I'm with Neil and Vince, I will get a beer for all three of us.
You can buy the glasses.
I can buy the glasses. That Vince says. Thank you, Julian. Appreciate that, man. Really appreciate it. Okay, cool, man. This is not a bad quarter. The stock right now is at 6.7%. I was right that it would pump. Neil, you were wrong. So I get bragging rights.
I'm happy to be wrong because now I'm making money.
Now you're making money. I don't own a ton of Tesla. You do, so you should be happy that I'm right. Up 6.6%, 227 prices that we saw a couple days ago, so nothing too crazy. But it's better that it's closer to 230 than 200, right? As we get into the end of the year with rate cuts coming up, and it doesn't look like there's any crazy red flags on this earnings. At least not right now.
From a technical thing, looking at the graph, we're now back above the 200-day moving average, so that's also good. I mean, it's good right now. The moment Elon starts talking about whatever on the earnings call, the thing can go down, and it will be red tomorrow when the market opens. So,
let's get CNBC's perspective. Then we'll go to some other earnings, guys, and then we have the call starting in about 40 minutes. In 40 minutes, we will get into the call.
Tesla, earning 72 cents a share. The estimate out on the street was for earnings of 58 cents a share. Revenue coming in just a little bit shy of expectations at 25.18 billion. The street was expecting 25.37 billion. We're just starting to dig through the numbers. We'll get you those auto gross margins, excluding the zero emission vehicle credits. But again, Tesla beating the street on the bottom line, earning 72 cents a share, 14 cents better than what the street was expecting. Guys, back to you.
All right, Phil LeBeau, thank you. Getting a nice pop on Tesla on those results, up 6% initially in overtime. Mike Santoli, this is a stock, though, that, you know, it's not at highs, but it has come a long way since the spring.
Yes, well, it's been every which way. It obviously is up pretty big from those August lows, and I do think it got a little bit. I was saying last hour, sort of pre-sold into the number a bit here. The gross margin, absolute headline gross margin, looks like a clear beat. As Phil said, you got to see the automotive X incentives, but it definitely is a beat, and people were braced for something a little bit worse. Top line, not so great. I think they're saying slight growth in vehicle sales for the coming year. So I think it's plus or minus about what the street was anticipating in terms of volumes.
Now we've got a number of other companies' earnings that are out. Control room, remind me, we have Mattel. What else? Was it Las Vegas?
All right, so we'll get into those other earnings. But yeah, I mean, nothing too crazy. Vince, I'm sharing what you've got on the screen right now. If you want it, no, I don't think you want to show this. It's just you had your deck open. You're muted. Let me pull up the deck.
It was shared from before.
It was shared from before, right?
Yeah.
Energy. What is the total storage? So storage deployed was 6.9 in Q3. It was up 75% year over year. We already kind of knew that number. 9.4 in Q2, 4.1 in Q1. So decent growth over Q1, slight decline from Q2. China Shanghai factory received 2 notable milestones, producing its 3 millionth vehicle in October and exporting its 1 millionth vehicle in September. Cost of goods sold per vehicle at the Shanghai factory improved sequentially to its lowest level ever. Europe, cost of goods sold per vehicle improved sequentially at Gigafactory Berlin. As of Q3 Model Y is the most sold vehicle of any type in Sweden, Vince, Netherlands, Denmark, and Switzerland. Not bad. And was the best.
There's a lot of Teslas here. There's a lot of Teslas here.
Do you own a Tesla? And if not, why not?
No, because I have too many kids, and I can't afford a Model X, and I have a Dacia Jogger, which is or Jogger or whatever it's called, 7-seater, insane value for the money.
Are you following Elon with the whole have kids thesis? Is that
I mean, he was actually an influence on because I had 2 kids. They got like they're 8 and 10, and I wasn't going to have more. And then and then yeah, I don't know how much TMI I can go into, but we had an accident with my wife, and then she was supposed to be pregnant, and we were like, oh no, like we're done with the kids thing, and and then like when it turned out that like she isn't pregnant, we were both like, ah shit, like we were really like starting to plan, with the kids, and then we're like, if we don't want kids, like how can we be so sad that we didn't get one? And then
you thought you were gonna have kids, realized you weren't, and then you got sad that you weren't gonna have kids, and then you just
exactly. And then we were like, okay, we need to sit down and talk, and then we were like, okay, what's the pros, what's the cons, and then like Elon was actually like he was like, yeah, he's correct. Like we do need more kids, and we can afford it. We have a good, loving family. And then it was like, okay, if anyone should have kids, it's us. Like it's yeah. And
I love it.
And we're very happy, but it's very insane to have 4 kids.
Yeah, I mean, I want to have 3 kids one day, so I feel like it's fun, to have a big family and
it's very nice with kids, and like it's funny because I it's a bit like going to the gym, that it's like having the kid is like, I'm gonna go to the gym, do the exercise, and then when the kids are growing up and they're a bit older, then you start to see the fruit of your work, and you're like, yeah, it was worth it, But
right.
I feel that sometimes society and friends need to push you through, like, okay, you need to get that kid, and then you will see it will turn out to be good,
Yeah, well, the exercise is fun, even if It only lasts 2 minutes sometimes. The exercise is fun to engage in. Tesla right here up 8%. So stock's up. Market's liking it. Market's not upset about these numbers.
For now they're pretty good. Plus, I see here. I mean, I think that's the same as last quarter. The Shanghai Mega Factory remains on track to begin shipping mega packs in Q1 2025. That's another money printing machine in the making for next year.
The gross margins on the energy business, I've never read this before, but is this a good number to you, Neil? It's 30.5% in Q3.
They're aiming for 30, so it's that's good.
Yeah, I mean, not bad, no?
Can I say something that is like half bearish? And I'm curious on Neil's take, because as we correctly observed, like there was a huge increase in the operating margin, which they didn't have any mass layoffs. They didn't have an increased ASP. So a lot of it is contributable to this FSD recognition, like my joke of that they changed the numbers in the books. And this they will not have next quarter, right? So I would be very curious if this effect of the FSD recognition, like did it add 1% to the margin, and then next quarter the margin is going to go from 10 to 9, or did it add 3% to the margin? Because then the next report that they're going to do, then the margins will go back down if they don't increase the ASP or they do some other change.
I mean, if they can continue with lower cost per vehicle, if we enter a lower rate environment, it helps the whole business. I don't think it's just the FSD recognition that does the trick. It's the fact that they can produce more vehicles at less cost and then sell them all, of course. Plus, of course, I mean, FSD does help just like everything else. And the fact that the energy side of the business is getting bigger and bigger. And as you've seen, it's a higher margin business. So I expect that to contribute and continue. Plus, I mean, Cybertruck is expected to ramp up. We know that Cybertruck is hurting margins until it reaches a certain stage. So yeah, I mean, yeah, it's much better than expected, to be honest. But then again, I'm sure we're going to hear some things during the earnings call that might change.
By the way, let's talk about how insane that is, that their average vehicle cost is $35,000, because that includes Model S and X, which should be more expensive. It includes Cybertruck, which is supposed to be a money furnace. And it should include Tesla Semi. I don't know how many they produce of those. But
no, Tesla Semi, and I don't think, I mean, even if they produced 1,000 Tesla Semis, it's nothing compared to the 400,000 vehicles they produce from the S.
Yeah, okay, true. But I mean, it's still insane, because then what is the cost of the 3 and the Y? Like, because, you know, the S and X, they like push the number up, right? So then are they making the average, and it's the average, right? Like with the some specs.
But look, the last quarter, just 1 second, last quarter, like production was for Model 3 and Y 443,668. Other models were only 26,000. So
S and X,
it doesn't really move the needle much.
Yeah, okay, so we'll get back to Tesla in a second. We got some other pieces of news right here. Palantir is up 1.4% because we got a new partnership with Palantir and L3 Harris. So that news just broke by our good friend Iliano. So L3 Harris and Palantir announced strategic partnership. This is coming from L3 Harris's website, not Palantir. So they're making the announcement. Let's just read it real quick. A strategic partnership to propel advanced technology deployment, development, and accelerate L3 Harris's digital transformation. The company's complementary capabilities, including L3 Harris's sensors and software-defined systems and Palantir's AIP, will together enable new levels of capability and resilient connectivity across the joint all-domain network, ensuring warfighters can make more informed decisions to protect our nation's security and that of our allies. L3 Harris has talked about Palantir last week, so it makes sense that they're kind of making a partnership more legitimate. Right here it says L3 Harris and Palantir's strategic partnership encompasses a variety of ongoing initiatives, including collaboration on U.S. Army programs like Titan. Palantir got a big contract for Titan a couple months ago. Together, Palantir and L3 Harris are investing in novel solutions that will push computing to the far edge, from radios and sensors to orbital processing as well. And I believe CARP is going to be on CNBC tomorrow. That announcement just came out as well. and he's going to be talking with L3Harris about this news. So that right there is why you got some momentum. Farzad, thank you for the $10 super chat. Appreciate it, brother. Thank you for being here in the chat as well. And thank you for those $10. So that's what we got on Palantir. Let me get some more details on Palantir. Until then, let's take a look at some other earnings we got going on, including IBM.
For Q3 2024, IBM reporting a top line miss, bottom line beat. Q3 revenue is 90.97 billion versus 15.06 expected. Earnings per share, $2.30 versus $2.23 expected. For Q4, the company guiding to Q4 constant currency growth in line with this quarter, which isn't great news, but also reaffirming free cash flow guidance. So why the miss? Well, it's not the software business where investors have expected growth. That is up 10%. It's the strongest showing in a while. The problems are infrastructure and consulting. Now, I spoke with CEO Arvind Krishna about these results today before the analyst call. Here's what he told me. On software growth, he said really strong demand, and that mainframe software did well. Automation and data did well. It's kind of across the board, and recurring revenue is doing really well. All in, I see actually very little to complain about in our software. People might say this is all acquisitive. Not true. 7% of the 10 points of growth was from organic, and only 3 points came from acquisition. Now,
IBM is down about 5% right now, 4.64%. Let's look at Lam Research as well.
Number, Seema. Morgan, this is the semiconductor equipment maker with first quarter results, which came in better than expected, 86 cents on its bottom line. That is a 6-cent beat, revenue topping expectations as well. Gross margins better than what Wall Street was expecting at 48%. The street was estimating 47%. And better than expected guidance, too, which was a key concern for Wall Street following that disappointing earnings report that we received from ASML last week. Tim Archer, the CEO of Lam Research, says our investments in key technology inflections position us well to outperform wafer fab equipment growth in 2025 and beyond. This is a company that does have high exposure to China, guys, with about 40% of sales. Shares are up about 5% because it has been an underperformer in recent months. Morgan and John, back to you.
Definitely a juxtaposition to ASML last week. Seema Modi, thank you. All right, Paul Hickey, our thanks to you.
All right, so Lam Research doing good, IBM doing Tesla now is up a little bit more. Wow, up almost 10%. Holy crap.
Yes, okay. I think, I don't know if you said this, but if we go back to, well, first page 7, slide 7, if you have it.
Yeah, I'll pull it up.
Maybe you said it. With regards to the Cybertruck, they say your Cybertruck production increased sequentially and achieved a positive gross margin for the first time.
Oh, wow.
So that helps a lot. Then, if we go to slide number 10, the outlook for the volume, they say here now, we expect to achieve slight growth in vehicle deliveries in 2024, which means that Q4 deliveries should be above, I think it's 512,000 for the quarter.
So
which they did not say previously. So that's something.
So hold on, Neil, you're saying they need to achieve 512,000 vehicles in Q4 to have a year-over-year positive growth in vehicle deliveries?
Yeah. Yes.
And what was last year? 1.8 million?
Yeah, something like that.
So even if they get 1.8.01, that would be positive growth, basically.
Basically, yeah. Because, I mean, I think, a month or so ago, the fear, or maybe even more, the fear was that they would not grow in 2024. So if somehow they achieve a record Q4 and they do grow year over year, even slightly, that should be viewed as a positive. And then they'll probably say, look, 2025, Cybertruck ramping up, newer models getting launched. They would think they could achieve higher growth.
I mean, that's not bad. That seems pretty bullish. Here's that quick piece of Palantir news, and then we'll keep going from there.
The joint effort will leverage L3Harris's sensors and software systems along with Palantir's artificial intelligence platform, which will, quote, enable new levels of capability and resilient connectivity, ensuring warfighters can make more informed decisions faster. The companies say the partnership involves a number of ongoing initiatives, including the U.S. Army's Titan program and the service's unified network strategy. Tomorrow on Overtime, we've got an exclusive interview with the CEO of Palantir, Alex Karp, and the CEO of L3 Harris, Chris Kubasik. They're going to join us right here to talk about this deal and more.
All right. That is
Okay, so I'll be live on the market close, guys, tomorrow, and we'll be covering Palantir and L3 Harris. So what you just said, Neil, about the Cybertruck stuff, that also might a little bit explain the 0% APR, right? Like it seems like from some level they're able to make up the money in other areas.
Yeah. I mean, if they feel comfortable doing that, then yes, that could explain it for sure. Plus, I mean, if they are launching, or they probably know internally when they're going to launch the refresh Model Y, then maybe they just want to maximize the output right now, and then poof, new model, ta-da.
This is pretty sexy, don't you think?
I mean, is if this becomes available to buy, I'll probably buy it.
Me too.
And this is a vehicle for Vince, the big one, the RoboVin, for all his kids.
Do you know how much I'm looking forward to the Cybercab? Like, because I don't know if you guys do this. Like, I'm trying to manage my time, and sometimes I look at, okay, like, where does my time go in a day? And like, just driving the kids around, it's unbelievable amount of time, like hours in a day. And if I could just make them breakfast, and okay, here's the Cybercab, sit in, it takes you to school, bye. And you know, then they automatically come home, and then it takes them to hockey practice and horse riding, and you know, I mean, I would be so much more efficient.
Wait. Your kids go to horse riding practice?
Yeah, my daughter, she does horse riding, and my son does hockey. Two of the most expensive sports that you
I was about to say, that's
kids.
some rich people sports shit, bro.
Yeah.
Horse riding?
I don't know. I don't know.
It's doing well.
Sorry, it's
Rocket Lab is doing well.
Yeah, horse riding is
poor people.
Expensive.
We don't have a horse, okay? So it's literally just paying for the horse riding, and it's not that
it's
expensive.
A pony. It's a pony. It's not even a horse.
The hockey is much worse. That is much worse than the horse riding for me.
All right, here's Dan Ives on the results.
As well as growth into next year from a delivery perspective.
So does the robo-taxi stuff matter?
Look, I think longer term, we think the longer term story here is autonomous, is robotics, is essentially the AI play. Street, what they need to see here, show me margins. You cannot have margins going toward 13, 14%. Now that margins are starting to level off, that is so important, not just from a cash flow perspective, but showing the worst is in the rearview mirror. And when you think about all the bears and all the negatives, it comes down to deliveries will start to uptick. China, I think, is a source of strength in the quarter. But that gross margin, it's a Goldilocks for any bear. Okay, it's a Goldilocks for any bull. The bears, it's kind of a nightmare for, because that was ultimately the core of the story.
Yeah, to your point, free cash flow, $2.74 billion. That trounced expectations for Q3. But some of the details we're getting here on the outlook, I think, are also really notable. They're basically saying, despite the ongoing macroeconomic conditions, we expect to achieve slight growth in vehicle deliveries in 2024. Also talking about energy storage deployments that are going to more than double this year. But perhaps this is most notable because I know you've written about this, saying plans for new vehicles, including more affordable models, remain on track for start of production in the first half of 2025. What should we take away from that when I know a lot of folks have been looking for a sub $30,000 vehicle? We're even expecting to get some details on that at the Robotaxi event, which maybe was unrealistic.
The linchpin to the story from a growth is a sub 30K vehicle. And I believe that hits by middle of 2025. That's the growth. I mean, that's ultimately, you're talking about like single digit growth this year. That's how you get to 10, 12, 15% type growth. Margins under control. That's what the bulls want to see. And I think the fact that they actually doubled down on, and I expect clearly on the conference call, they'll focus not just on margins, but more details around that vehicle. Look, Robotaxi Day, we could argue, you know, many would say that they're disappointed. I believe ultimately that shows the vision, the autonomous and the AI vision. Street need to ultimately see, stop talking the talk, walk the walk, show the margins. They did it. And Musk really has, I think, stepped up in that capacity.
In what's been a year of softness for EV demand and obviously more adoption of hybrid vehicles, for example, are we going to look at Q3 as an inflection point for that changing, especially when you look at results like this today? Or is this a Tesla specific story as they do deploy more manufacturing techniques, more software, more AI, both internally and externally?
I think it's a combination. I mean, you got you look at GM's quarter. I mean, that was a Juan Soto-like quarter for GM, and then you look at what we've seen in terms of Tesla. I believe this is the inflection point. This right now is the start to me of what we're actually starting to see from a gross margin perspective. The renaissance of growth come back. They've essentially been in between two growth waves. Next year, you have a sub 30K vehicle. Then the autonomous and AI vision plays out. And that's, in our opinion, that's how you get to trillion and a half market cap. And right now, as we've seen, like, look, New York City cab drivers bearish on Tesla.
Okay.
And I think that's a good setup relative to what we see in the next 3-4 quarters.
Listen, we got to go, but quickly, Palantir, your reaction to that news?
I mean, that's huge. It just shows doubling down on Carp and Palantir on the defense side. When you think AI in the 202 area code, Palantir really owns that market. The fact that that partnership, just like Microsoft and others, we'll hear more in your interview tomorrow, that's a huge flex the muscles for Palantir and Carp.
All right. Dan Ives, great to have you on
Thanks.
set.
Cool question for you guys, and then I want to get your thoughts on what Dan Ives said about Tesla. But do you guys think Tesla and Palantir could be the single best 2-stock portfolio of all time when it's all said and done?
You're asking the wrong guy. What do you think I'm going to say to this?
I know you're going to say Rocket Lab and one of these.
Exactly. There
okay,
you go.
So you don't think Tesla and Palantir delivers the most returns over the next 30 years together?
I mean, I might have a portfolio soon of Tesla, Palantir, and Rocket Lab, and I think that those 3 stocks will give you very good returns.
Okay, Couch.
I mean,
to be honest, I just want to say I have my doubts on Palantir at these price levels. So normally yes, but I feel like Palantir they either need to report amazing growth, because I feel like we're priced to max perfection.
Yeah, but he said 30 years.
Yeah, like give it time. Like you know.
Yeah. 30 years Tesla, Rocket Lab, Palantir. I think that's your bet.
Okay, Couch.
I mean, Tesla is my number one position, so I'll take that bet. And then Palantir, yeah, maybe, but yeah, I don't know. I think 30 years, if you have both of those companies in your portfolio, I think you'll retire. So, I mean, that's quite good. Plus, and you cannot go wrong with all the other companies, right? All the big techs, the Amazon, the Nvidias. If you keep those, I think you'll do quite well. So I don't know if Tesla and Palantir are the go-to ones right now. I mean, I own both, so I don't mind. But yeah, there are plenty of other options probably out there. It's pretty crazy. Let's be honest. This whole AI era thing. I mean, every week, every month, I keep questioning stuff like, who knows what company will exist in the next 5-10 years, because AI will disrupt everything we know. We think this company has a moat, but then suddenly, I don't know, an AI supercomputer exists and your moat gets thrown out of the window. We don't know. It's crazy, exciting times. But
it's so funny that maybe we go back to, like how we had like 30 or 50 years ago, we had the industrial companies that were really big. And then everything went into like software and tech, and maybe like AI will 100% ruin that. And then we go back to like the only real moat you can have is like how you manufacture things, because you
hardware for sure.
Yeah. That's what I mean.
For
like
sure.
maybe it will change, and then
Yeah, I agree. The unknowns of AI are making. I mean, like, first of all, we don't know what's going to happen to Bitcoin, right? What if MicroStrategy pulls it off? We don't know if SpaceX goes public, and what if that becomes a multi-trillion? I mean, there's just so many different opportunities. It's hard to be bearish over the next few decades in terms of just technology, but it seems like there will be some core winners on this as well. Okay, so go ahead.
Yeah, now think 2010 and then think 2020. The things that you had in 2010 and then the things that you have in 2020, okay, now we're 2024, but it might just seem 10, 14 years, but there is like a huge difference in tech, software, and definitely hardware. I mean, imagine what happens in the next 6-10 years, especially now with all of this accelerated computing and all of that. It's going to be crazy. AI glasses, like super advanced self-driving cars, maybe even flying cars in the cities with eVTOL. I mean, insane. I'm not even talking about all the alpha folds and discovering cancer 5 years before it even appears, and all the lives that you can save through that. That's, I mean, exciting times. Times.
It's a lot of exciting times, and it feels like the technologies that are underpinning the foundation of all that stuff you're talking about are getting made in front of us. Some breaking news: Boeing satellite just exploded in space.
You cannot be serious.
It's not breaking. I saw this.
It's exploding.
No, I saw it maybe even yesterday. It's not.
I think it may have come out yesterday, but it's hitting. This one was tweeted 8 minutes ago, so it's hitting the mainstream media right now.
Yeah.
Boeing stock.
I don't fucking understand how a satellite can explode. Like, it literally has no moving parts. Like, once it's up in space, I'm like, I asked the one who reported on this on Twitter. I don't know if I got an answer, like if it was attacked or something, like if somebody like shot it down or.
The stock doesn't move, so I guess it's not important.
I don't know. I literally don't understand how it can happen, because a satellite is like, you have solar panels and then you have a box that has like a computer in it, and like, how can a computer? I don't know.
Okay, let's get an earnings update on ServiceNow and see what's going on with these guys.
The 2.75 expected. Subscription revenue is 2.72 billion. Earnings per share $3.72 a share, over the $3.46 expected. Remaining performance obligations, that's a pipeline measure, 19.5 billion versus 18.45 expected. CRPO is 9.36 billion versus 9.09. On the guide, ServiceNow guiding to subscription revenue of 2.878 billion at the midpoint versus 2.86 expected. Now, I spoke with ServiceNow CEO Bill McDermott about these results again before the call with analysts. Here's what he told me. I asked him specifically about the company saying it's got 44 customers spending at least $1 million on AI. How is that structured? He said, we're getting $1 million right out of the gate in our subscription revenue from those customers. They'll repeat that each year. In fact, we had 6 customers that were spending over 5 million. We had 2 that were over 10 million. So what you're seeing is the cohorts of this platform and our biggest deals, they included 7 out of 10 products in our biggest deals. In other words, they're getting more than just one product. They're bundling a lot in with these customers. I also asked them about the margin impact of AI as those workloads grow. People talk about how much you have to spend on NVIDIA. Is this really margin positive? He said, the margin impact on this is equivalent, if not better than the standard run rate margin. So we're not taking advantage of people on pricing, but it's not dilutive to pricing. Again, remember the domain-specific nature of our LLMs. There's 2 benefits to that. One is the margin performance for our shareholders is great, but also for the customers. They're working with customer data, so they're secure, there's 0 latency, and they're cheap to run. So it's like 175 GPUs versus 1 GPU to run on a process on the ServiceNow platform versus going out with an LLM on the internet, as an example. I also asked him about whether customers are pausing demand ahead of the election. So this compares to what we just heard from IBM. Bill McDermott says, no, not at all. I think that the prevailing theme is customers are going to have to digitally transform regardless of who wins the election. On a global basis, it's the same story. I've been all over Europe for the last couple of weeks, and I have never seen Europe leaning in at a government, public sector, or private sector level more. They're leaning in more now than ever. So it looks like the IBM piece on software grow up 10%. ServiceNow is seeing that in spades, and we see that reflected in these results now. Granted, ServiceNow stock has been doing quite well recently. So we've got, we'll see how the stock continues to, that's another one that had more of a negative reaction is coming, it looks like, off of that bottom.
Yeah, but to your point, AI is the secular growth story within tech right now. This is where folks are putting money to work. If it's more uncertain or they feel like they need to tighten belts, it's everything X AI.
Yeah.
Yeah. All right. Well, let's go back to our.
Do you guys have any thoughts on ServiceNow?
No, other than my friend used to work there, I think in 2017, 2018, told me to buy shares, bought some shares for my father. We kept it a little while, then it went up a lot, and now I see it's at $900. I think we sold at $500 or something, bought at $120. Still did good, but yeah, should have kept it because it's an amazing company with great leadership. When he worked there, he said the product is insane. I mean, back then, 2017, I guess it was a pretty good product that came out. Company was much smaller as well, and they were growing quite fast. So, yeah.
Yeah, it is not the premier software AI name. However, there is an indication of software IT spend that this company always kind of lays out for the broader SaaS ecosystem. And you got some people in the chat saying they use it at their jobs, but it doesn't do much, kind of similar to Copilot or CRM. But it is catching a bit of a bid from the demand for AI. So maybe that's why we're seeing some momentum, up 32% year to date. Okay, cool. So what earnings have we had so far today? We had T-Mobile, which is, I'll try to get their numbers in a second, but T-Mobile was up 5%. Tesla up 9%. T-Mobile still up 3% now. IBM down 4%. We saw they had some issues with their infrastructure spend. ServiceNow down about 1%. Stock was probably up a lot year to date. That's why it's selling off a little bit, which is what I'm seeing a lot in Q3 earnings for companies that have gone up 20 to 30%. They're selling off on earnings, which is okay because, you know, they just can't deliver crazy good results, but they're not delivering horrible results, which is it's a good thing. And it's not a bearish reason why they're selling off. And then we got Lam Research that crushed earnings. They were up 5% today as well.
Like Vertiv, they reported, I think, before the market opens, good results, but I think guidance was a bit weak. Plus the stock was up, 137% year to date. So it went down 3.6%.
Yeah, Vertiv as well. I mean, they were up 150% year to date, as you said. They do liquid cooling technology. They crushed earnings, down 4% today just because they were up a lot, right? And sometimes you need to take a little bit of a cool down. We got about
great.
Yeah, the earnings were great. We got about 13 minutes until Elon speaks. Let me get your guys' thoughts on some other stocks in the stock market. Nvidia hit all-time highs 2 days ago, now at 140. Is Nvidia a buy right now, or are you kind of afraid of the valuation here getting frothy? Let's start with Vince. Let's get his thoughts on it.
I missed the Nvidia train, and I'm definitely not getting in on these prices. I am a pussy when it comes to Nvidia.
Okay. So do you think it's overvalued here?
I mean, the like I missed it. It was a mistake that I didn't research it before, and I don't know. I like stocks that have a lot of growth potential, meaning like, you know, 5x, 10x in 10, 30 years. And I don't really see this company going from 4 trillion to 40 trillion. So I feel I've just missed it. It was a mistake, you know, and yeah, it's not for my investment style currently.
Okay. By the way, the Tesla call starts at 5:30, so we actually have some more time. So what I'm going to do is we'll do what we did last time. I'll put the StreamYard in the chat. If anyone wants to join, ask a question, come on stage, give their thoughts, comments, feel free to join. Just have your camera and your audio on. And if not, then that's fine as well. Neil, your thoughts. Is Nvidia overvalued here?
I'll first address what Vince said, because you said it's a mistake that you didn't research it. I don't think it's a mistake, because you did research Palantir, you did research Rocket Lab. They're doing quite well. I mean, Nvidia is an amazing company, and I speak from someone who bought the stock in 2018, 2019, held it, and then sold, I don't know when that was. It was at $300 and something pre-split. And then, I mean, I kept following the business. It went back down because, well, gaming went down, and then the data center segment was not as big as today. And then when it went back up, it's very difficult to say, oh, I followed Nvidia, I knew exactly what was going to happen. I don't think I'll believe one guy that will tell me that he knew that Nvidia would grow 80% quarter over quarter. No, it's something that I don't think I've seen ever. So if you had a position, great, you're making a lot of money. If you didn't, then okay, maybe you missed it. So what? But do I think it's overvalued? If you look at the pricing metrics there, maybe it's super high, but it has been super high before. But the company continues to grow. It has the majority market share in the data center GPU accelerated computing segment. It's going to stay like that for a while. I mean, can you show me a company that is growing as fast as NVIDIA, that is as big as NVIDIA, with margins as high as NVIDIA. I don't think many of those companies exist, and I don't think we are near the end of the cycle. So yeah, keep holding your NVIDIA shares is probably what I'll say, because this company is going to be printing billions for years and years to come. Would I buy today? No, because I like what I have right now.
I think that's fair. I do agree with Vince that the risk reward on NVIDIA is not amazing at 3.4 trillion, but I think it's fair that if you believe in that long-term thesis, and especially if you got it at a lower price below 90 or whatever, there's not a real big reason to sell. Same thing with Palantir. Like, is it expensive at 43? Yeah, but if you got it at 11 or 12, is there a good reason to sell? Probably not. So it's one of those things where you kind of just let that story overall play out. Let's get on one of our guests who is backstage to join the show, friend of the channel as well, Mr. Sam Solid. Sam, what's up?
What is going on, guys? How's it going, Neil? How's it going, Vince? Love you, YouTube. I used to watch that Rocket Lab Weekly, and then I stopped because I divested from it. But how's it going, man? You were talking about ServiceNow earlier, and someone in the chat said Bill McDermott dresses like a baller. He doesn't dress like a baller. He is a baller, all right? Like, the guy's a killer CEO, best successor from Frank Slootman, who was in Snowflake, and then now is just the director and so on. But I mean, that company is freaking killing it. Like, a lot of people don't know that their back end, as far as their support tickets, as far as their CMDB, which is collecting all the resources from everything the company, it's running the entire show. And ServiceNow is a huge market owner of that, and they're just gaining clients over and over and over again. So it's no surprise to see the numbers that they posted up. I mean, at their valuation, they're at a market cap of $187 billion as of close. To be growing at 23% revenue year over year with all of that subscription revenue and the raising guidance, you'd expect the stock to be up. But I mean, it's historically trading at a very elevated compared to its mean EV NTM sales. So, you know, I'm not surprised to see it not gap up after earnings like 15%. It ran so hard. So, you know, I mean, they didn't beat guidance like out of the park, but they did beat guidance, which is good. It's a triple beat.
Is ServiceNow a must-own name in the AI revolution to you?
Yeah, I think it is one of the leaders in the sector. It's already gaining revenue from AI features that's supplementing. They are partnering a lot with NVIDIA. They've had countless interviews and countless partnerships with NVIDIA, bringing Jensen Huang on. It is definitely a great name to keep long-term. The only thing that I'd be concerned about right now in the short term is its valuation. It's trading like 17 times EV NTM, which is close to as expensive as how much CrowdStrike is selling at. And, you know, there's a lot of software stocks that are very elevated right now. Is it something that you can go to sleep at night pretty good owning in 20 years and it'll definitely be up? Yeah, for sure. Like, this company will always be around for a long time. But I think the easy money's really been made on it. And even Neil said that he sold his dad's shares around 500. I didn't get in until like the high 500s, and I recently did get out, mostly because of the valuation where I'm looking at the market right now as to where it is. Yeah, I mean, if you want to own software stock and you want to be in a safe place, definitely deserves a place in everyone's portfolio for software.
Okay. Sam, your thoughts on Tesla and these results?
Well, I mean, you got that margin expansion. That's the one thing that's really been taking the stock down, and they got the 20% gross margins back, which is really good to see. That's what I saw, right? 20% gross margins. I haven't really looked too close into the report. So, you know, I did have a lot of fear, but it is a momentum stock. I mean, you know, there was a lot of negative sentiment surrounding the stock for quite some time, and then it went from like the 130s all the way up to the 270s because it was just so bearish, right? And everyone was not positioned correctly in it. And then now it's the other way around. But I think it kind of needs to base out around over here. I do own Tesla. I own it in terms of spreads for 2027. So good to see that's up.
What are your strikes, your targets?
300, 400, and they're going for about 1,700 right now. So they're going to be up pretty decently tomorrow. But it's cool. Like, I mean, I'm not trying to, it's so hard to value this company because a lot of it is really driven on momentum and its future growth. I don't think it's just an EV company. I think it's a lot more than that. And if you do believe in that, then I think it's a good stock to own for the long term. Short term, I mean, how do you play this animal in the short term? It's very hard to guess where it's going to go.
So 400, meaning you think by 2027 it's $1 trillion company in your eyes?
Easily. I think the EV market is in a very big secular trend, and they're not just in EV; they're also in energy, and they're also in robotics as well. Like they have 3 different tailwinds that they're being included in, and on top of that, they're probably going to start reducing their capex since I think they're planning to fabricate their own chips too. So there is a good amount of reduction in capex that's happening there. They already are in profit margins for the Cybertruck. That took a while to happen for the other models. But at the same time, there's a lot of incentives out there, but a lot of those incentives are passed down from the government. So it's not exactly going to be burning a big hole in their pocket.
Vince, agree? $1 trillion by 2027?
On Tesla.
Yeah. Market cap.
I don't know. There is the chance is non-zero, but yeah. $1 trillion. No, I mean okay, sorry. Should be easy actually. I thought he meant 10 trillion.
Good Lord. No way.
Yeah. I realized it in my head. I'm like, yeah, we're quite close to 1 trillion already. Yeah, it should be very easily. But I agree, very hard stock to value. I think a lot of value is in the future, and then depending on how risk on or risk off the market is. So I think a best strategy is for like if you're a long-term investor is when the stock is low you add, and then when it's high you wait or sell covered calls, and when it's low again you buy more.
Yeah.
Neil,
what do you think is going to be the first $1 trillion stock? Tesla?
Tesla or what?
Tesla.
Or Rocket Lab. Okay.
If Vince said Rocket Lab, well, we know he's sipping the Kool-Aid.
Jesus Christ! If Rocket Lab would go to 1 trillion, oh my God!
How much is that per share? You've got to know the number, right? How much is that?
I don't know the number.
How do you not know the number, bro?
Wait. 5 billion is the current value.
Or times 20.
Maybe 200x.
Yeah, $200.
200. Sorry.
Yeah, $200 a share, roundabout.
Yeah. That would be nuts.
Neil, you agree? 2027, $1 trillion.
No, yeah,
2000.
Oh yeah, because the stock's $10 right now, right? So 200 times 10. Yeah.
What is that times 65,000? That's how much money I would have.
Will you still have 65,000 shares by then?
Why not? Yeah, I mean, I'm not planning to
sell. 1.3 million, I think, right?
Oh, it's 130 million. Wait, there's no way.
130 million.
Yeah.
Vince, you can start having more kids.
Definitely.
Yeah, you're gonna start having more kids now, man.
From many women, and they would not be angry at each other. They would be like, "That's fine with us."
Okay, Neil, do you think
your wife's not watching?
do you think $1 trillion by 2027 is possible?
Yeah, I think it's possible, because by then you'll have the Megapack factory in Shanghai, which is already next year. You'd have the Tesla Semi, you have the next generation vehicles, more affordable ones, hopefully robotaxi, FSDs unsupervised in China, maybe in Europe as well. So yeah, $1 trillion. I mean, we are right now over 700 billion, right? So it's not that far away.
Yeah, it's definitely not that far. And it hit there, at one point. Probably wasn't justified in 2021, but it did have a touch with that trend on market cap.
It did hit. I mean, Meta had the same thing, right? It hit $1 trillion, then it dropped significantly, and now it's comfortably over $1 trillion, and it's not even that expensive.
Right. Okay, cool. Sam, thanks for joining. Appreciate it.
Thanks for having me, man. Talk to you later.
Yeah. Talk to you later. Bye-bye. All right. So we have this earnings call in about 30 minutes. And so we will see what Elon says on the earnings call. What do you guys think the core question the analysts are going to go for given these numbers? I mean, Cybertruck gross positive margins, vehicle deliveries will grow, H1 2025, $25,000 car seems like it'll be in production. It doesn't seem like there's anything super annoyed the analysts can be about on this call. It's hard to imagine they.
I know what I would ask. I know what I would ask. I would ask them, as I said before, like the FSD recognition, like how much did that play into the operating margin? because they will not have that tailwind in the next quarter. And it's just out of curiosity. I actually don't care.
Why not?
Sorry?
Why wouldn't they have it in the next quarter? Do you think they recognized all of the FSD revenue?
No, but then they can only recognize more FSD revenue if there is more features coming out of FSD. And I don't know how, because basically what this means is that they were selling FSD, right? Like, let's say that they're selling it for $10,000. Let's say, I'm just giving numbers. And it was book kept on the balance sheet as like a debt to customers, right? Like prepayments from customers that they cannot like charge for. And then with this recognition, they said that, okay, like we delivered 20, 30 or 40% of FSD, right? So then suddenly all this money that was on the balance sheet, it gets recognized as revenue instead of like a debt or prepayment from customers. And so my question is like, how much did they recognize? And because I do think it, like, if it was like, you know, like if it was a 3% increase in the operating margin, that is, it would be quite tough to reach that next quarter, to not go back down to like lower gross margins and lower without that tailwind. Like, I would want to ask that.
I would want to ask, when is Optimus going into production? I just looked at the deck. There's nothing about Optimus, so they didn't say anything there. Again, I think Elon has to be vague on this because they're still trying to figure it out. But is that something, Vince, that would, like, if you see Optimus really start scaling, let's say in a year or two, would you sell off some of your Rocket Lab just to get into? Because that TAM is greater. That TAM is greater than space.
Look, I'm not a guy who's selling, so you need to find money to be able to have both. Like, it's stupid to sell one of your winners to buy
You
another
sold
one.
Tesla, didn't you?
It was not a winner, and I was right about it.
I mean, technically, when he sold it, after he sold 2 months later, it went to 130. So I mean, it was a good sell at the time. But do you think robotics? Could someone go long Tesla just on robotics?
I it's funny. I don't know how to evaluate it, but that is part of my, like, a big part of my bull thesis. And I want to say, today I was in a building store and I was freaking annoyed. So I think I was in Bauhaus, that is maybe like Home Depot in the US.
Wait, what's it called? Bauhaus?
Bauhaus, yes. I don't know if, Neil, you guys have it in the Netherlands.
No, but Bauhaus, like the style?
No. It's a building store where you go in and
How do you spell it? How do you spell it?
Like BAUHAUS. Yeah, exactly.
Okay.
So the point is, it's a building store, right? And I needed to find like some plastic pipes on a certain size, and then I needed to find a kitchen. What do you call it? I have the Swedish word, but not the English. But a kitchen fan, like over the stove.
Yeah.
And all of their workers were busy, and I was like waiting half an hour to like freaking find the pipe, and then I had to wait another half an hour, and I'm like, why can't they just have a few Optimus robots where you can say, can you show me where this pipe is? And then the freaking robot could walk with you, and then just, there, Vince, pick it up from there. And then you ask, where is, like, to help you with your order. And I'm like, it would be like one of the easiest use cases. And this store that I was in, they're like notorious for their bad customer service because they have too little employees, to handle the customers.
I mean, an easy fix is an app with the map of the store, or a digital screen that just tells you it's in D4, row 12.
Yeah, but sometimes, like, you go there and then it's like sometimes they have it like way up in the shelf, and then they need to get like a forklift to come, and that like the kitchen fan, that's what happened to me. Like, you looked online, it told you where it was, and they have it on stock, and then you go there and it's not there, and then I had to wait like half a freaking hour for a seller to come there, and he's like, no, it's here, and then he goes there. Oh shit, it's not here. Okay, let me get the forklift. It's up there on the shelf.
I mean, it seems like the use cases are endless for that bot.
Yeah.
And
but what I mean is, like, here you wouldn't even need, like, you just need a walking, talking robot. Like, you don't even need the robot to be agile with the hands or anything. It's just, it needs to walk with you and point. Like,
So a hologram could work as well.
Technically, yes.
So
yes.
the question though is, when would you buy more Tesla, regardless of the price, because you want to go long robotics? Like, are you waiting for an entry price to? Because I could buy Tesla right now at 200, 230 and have to wait 5-6 years for this thesis to play out. But is it worth waiting? Because you never know when Elon's going to pull the rabbit out of his hat, and then boom, Optimus has $40 billion in revenue.
Yeah, I'm a bit short on cash, so I'm thinking about a very advanced option play on on Tesla tomorrow, but I have to take my pen and paper and see if that
Here's
works.
one thing I will say. One thing I will say about option selling, which my channel has grown to love it. Vince, you've learned so much. You and me talk all the time about option selling. TJ, obviously a big option seller. Here's a question for everyone. I want to know what the chat's opinion on this is. Does it only work in a bull market? Meaning if 2025 is like 2022, or even a little bit not as bad as 2022, but still bad, does selling puts and selling covered calls actually work in a way to provide cash flow?
I tell you what, it's my personal experience that I think that selling options in a bull market, it actually lessens your gains. Like that's what happened to me, that I had cover calls on Palantir and on Rocket Lab, and I wish I didn't have them, but they provide cash flow, which is a different, like, so I think that if you don't need cash flow, you're fine just sitting on your stocks, then I think you don't need to look into option trading, because you can make a higher return on your money if you pick good stocks and good entry prices. If you're in a situation that you need to retire, or you need to supplement your cash flow, then option selling is a really good way to do it. And on a sideways market, then you're killing it with option trading.
Correct. Which I think 2025 is more. I don't think it's necessarily bearish, but I think it could go sideways just because 2024 was really good. Because the premiums get better in a bear market theoretically, because people pay more for puts, right, to protect themselves. But then if you get assigned on the puts, it's like.
Amit, listen to this. I'm curious what you think. So if you would sell a 400 strike in the money put on Tesla, it's like I would get money in on my account, and it's technically very similar to owning the stock. It's just if the price goes above 400, then I don't follow the gains anymore. But it's like I could do that. So and I'm even getting like a lower entry point, because there would be a little bit of time value in the put option. So if it would be like a leap, like meaning, like let's say it would be a 2026 400 Tesla put, it's like,
I don't hate that. The question is just, do you think it's actually going to get to 400, bro? I mean, that's.
But it doesn't need to, because you understand, like, if I can handle, like, you can, if you come to that point and it doesn't come to 400, you have to buy it for the price that is today, or you can roll the option and give yourself some more time.
Yeah, you're getting $19,000 of premium right now if you sell one put for December 2026 at 400. Yeah, look, it's not the worst strategy, especially if you know how to roll it. I'm
thinking about this, but
would you want to buy? Would you want to actually buy 100 shares at $400? That's also the question. Like, I know you're
not. No. You're not buying it at 400 because you're getting paid the put premium.
Yeah, I get that, but you would still theoretically have to buy it at 400. You know, I know your adjusted cost basis is not 400.
Yeah,
but if it's like 350, you know.
No, but I mean, I'm looking at the adjusted cost basis. Like, it's a great way to sort of like, I don't have the money, and then you like lock in that price, and then if the stock goes up, like you have the choice of like fulfilling and actually buying the stock, and then you have like today's price on that, or you can buy back the put option, and then you lock in the. I don't know.
I mean, look, if it runs up to 350, you can lock in probably 70% of the gains, before you have, so that's fair. No, it's fair.
Yeah.
Let's transition to Apple a little bit because we did get some breaking news on Apple. So Apple today, there's this big account that covers Apple. This is like the main account. And he posted today, iPhone 16 orders cut by around 10 million units for fourth quarter into first half 2025. No evidence yet that Apple Intelligence could boost iPhone shipments in the near term. Let's get an update from CNBC on this. And then I want to get your guys' thoughts on what do you think for Apple?
Securities, and I consider him the best analyst out there following Apple. Today, in a new note, he says Apple is cutting about 10 million iPhone 16 orders this quarter and through the first half of next year. He says the cuts may not reflect in Apple's results until next year, though. But year over year, unit shipments are still expected to be down because of those cuts. Also says so far, no evidence that Apple Intelligence, which is launching next week, is driving sales if Apple is cutting now. And on top of that, let's look at AT&T CEO John Stankey this morning. He implied iPhone upgrades are less than stellar so far. This was on this morning's earnings call. He said they're still waiting to see if that AI update will drive more sales, but also warned it's an iterative technology that could take a long time to adopt. By the way, Scott, Apple earnings just 8 days away, October 31st.
I can't believe it. We're going to be talking about that before we know it.
Yep.
Steve, thank you.
Thanks.
Steve Kovac with some color on what's happening there today. So, Bryn, what do you make of this news from a very influential analyst, maybe the most, according to Steve?
Well, I mean, Apple's at basically an all-time high, right? So it's like, don't be sad for Apple shareholders. But I mean, I've been saying this really consistently. I mean, I do not think this upgrade is going to be exponential. I think it's going to be incremental. I mean, if I look at my own iPhone 14 Pro, I already have 4 AI apps on there, ChatGPT, which Apple's using. And so I do think it's going to be incremental. And I think listening to John Stankey, it's like, this is going to be slower because it's going to roll out. And I think we'll have to see. And so I don't think people are going to be buying iPhones for their kids for Christmas like they did 10 years ago, just because it looks and feels like the old iPhone at this point. So I think Apple investors should expect a market perform, which is really what Apple's done year to date. It's right on top of the S&P.
Yeah, Chris, last word to you. I mean, it is interesting, the bifurcation between some of the mega cap names, right? For an NVIDIA and an Apple going higher. There's been a Microsoft that's traded a little squirrely. What does that mean to you?
I think that's great, right? So the market is differentiating. And if everything was going up in sync, I would have a problem with that.
What do you guys think about Apple right now? Is it as simple as no one's going to upgrade and we are all crazy to expect people to upgrade to the iPhone 16? Or are people going to upgrade and the stock's headed to 250? Neil, we'll start with you.
So I've been saying this for a while. I mean, Apple, the stock itself is, I won't say super expensive because, I mean, we're talking about Tesla that's even more expensive, but at least Tesla is expected to grow much more. Apple has barely grown, right? In the last couple of years, business-wise, not stock. Stock has done very, very well. But yeah, I mean, 32 times forward PE for a company that I think last year has not grown. I don't know. I mean, innovation-wise, what did we get? A new iPad mini? Wow, incredible stuff. The Apple Vision Pro was supposed to be the next big thing. Incredible. Great product, by the way. But did it work out? No, it did not. Obviously not. Look at the price of that thing. Then look at the alternatives, the Quest, for example. So yeah, I'm not surprised. I'm sure plenty of folks will upgrade and have already upgraded. I mean, I was in Berlin a couple of weeks ago on the day of the release. There was like a huge line outside the store. And I'm walking there and I'm asking some folks, I'm like, the internet exists, right? You can order and they bring it to your house. You don't have to wait here outside to buy a phone that you basically already have in your pocket, but you just want the newest one out there. Because let's be honest, the last couple of iPhones, and it's not just iPhones, it's every phone. I mean, they've become so good that, I mean, why should you upgrade every year? Just doesn't make sense. So yeah, I'm not that bullish Apple, but I will admit it's an incredible company, probably one of the best of this century. But yeah, innovation-wise, they've slowed down and gone down the drain. But still a money printing machine.
I agree. Vince, your thoughts on Apple?
Yeah, I mean the same as I said, or I mean even more that I said on an NVIDIA, that it's like on Apple, I just don't see the growth. Like I'm a growth investor who really likes to, invest into companies that have like a 10x potential on multi decades. And on Apple, like I don't really see where the growth. Like I feel that they're super mature and it's a company for another investor base. Yeah, and it feels like this release, it was like there was very high expectations and it ended up being a dud in a way, because but I think that the next iPhone where Apple Intelligence is more mature, and so the iPhone 17, I'm kind of excited to see that one. I have a iPhone 13 Pro Max, fully paid. I'm very much enjoying that my phone bill went from $100 a month to $20 a month, which actually keeps me from upgrading. Because then I have to go back to paying $100 a month. So it has to really be a special upgrade for me to do that. But maybe the next one, I'm kind of excited. Like if the AI products get more mature, like what it looks like.
But that's the thing. I mean, the woman in the video said that, right? You already have AI stuff on your phone today, right? You can download Perplexity, you can download ChatGPT on the phone. So I don't know. I mean, someone wrote here, Steve Jobs left Tim Cook a Ferrari and he's driving it like a Corolla. Yes, it's true. I mean, I remember the only Apple product I ever owned was the first iPod Touch. I mean, I was so excited, so mind blown. You cannot sue me anymore, so I can say this. I was jailbreaking the shit out of it each and every time. It was so much fun. Now, Apple is like, oh, look what you can do now. You can rearrange your icons how you want. I was like, wow, bravo. Such innovation. I mean, why aren't they coming out with new exciting stuff? How come it's Mark Zuckerberg, Facebook, Meta that comes out now with the amazing hardware products, among other things? It's just, I just don't get it. Maybe it's because they were just too comfortable. They see services growing. It's generating billions and billions for them. They have a share buyback program of what, $90 billion or something. I don't know. It's insane. And so, yeah, maybe you get complacent. I don't know.
You know, it's such an interesting topic of discussion, this point, because you have the S curve of product adoption, right? And I think that you can have this S curve also in the innovation, because yes, like what I mean is that, when the iPhone came out, it was like here on the S curve, and then they were innovating on it, like bigger screen, Siri, meant like you can, and then the innovation, like, because it's also like it's not possible to innovate more on the iPhone. It's a freaking iPhone, like at one time you max the battery, you max the screen, you max and then I feel that the only way that Apple could innovate more is that they need new banger products, right? Because like on the milking the product for all it's worth, they're doing really good. Like it's a very good team on the, and so this criticism of they're not innovating, like I agree with it and don't agree with it at the same time. Like I think that they would need brand new products, and then like they did the glasses, but that was a flop. Then they were trying to do the car, and then they chickened out, and they never bought Tesla, and then they decided to kill the project because of Tesla, I guess.
Dude, so imagine if they actually bought Tesla.
Yep.
2018. Elon was ready to sell for, I think,
$5 billion or something.
No, not 5 billion. The market cap then was like 40 billion. So I think he was willing to sell to like 70 or 80 billion. 2018, the market cap was 40 billion, if I'm not wrong.
Oh yeah. Or was it to Google that he almost sold for 5 billion? It was
maybe
in one of his,
maybe that was earlier on.
Yeah, earlier on, yeah.
Tesla, I mean, Apple spending, let's even say 100 billion is nothing in the grand scheme of things. But think of the arc of history. Elon would have never had the money to buy Twitter. He would have never had the freedom he has right now in terms of saying whatever he wants if Tim Cook is your boss, right? And you're under the Apple brand that is super non-political. Like, it just...
Would it have worked? I don't think Elon can work for other people.
No way.
I think he's unemployable.
Yeah, that's the thing. I don't know if it would have worked out, even if it's Apple. it would still. It's
I mean,
still
probably
Elon's Tesla.
Yeah, but it probably would have been that he leaves the company and then Apple runs Tesla. And then the question is, would it have had the same arc? Like that they come out with the Model 3Y? Would there be a Cybertruck today? Would there be FSD?
No.
Yeah.
There will never be a Cybertruck today.
Yeah.
Yeah, because remember, Elon was so desperate in 2018 because the company was doing so badly that he was
Mm-hmm.
literally thinking of giving up everything just to get some return and to make shareholders a little bit of money. But Apple didn't take the meeting, and then Elon figured out how to do it himself, and he pulled it off. You know, now we have Tesla where it is today, which looks like it will be on a very successful journey. But the people that made money, which are millions of people, that 20x'd their holdings in the stock, Neil, one of them, 15, 20x, whatever it is, they wouldn't exist. Right? I mean, the retail investor base that exists in Palantir, Rocket Lab, all of that started because retail investors kind of beat Wall Street when it came to Tesla, right?
Yeah,
it's like the foundation of what retail investors are today. Seems like Tesla set that up for everybody.
I agree with you.
And I mean, Vince, you said Siri for Apple. I mean, was it a successful thing? Not really.
When it came out, yes. Like I don't know if you remember, my first iPhone was the iPhone 4, and when Siri, I believe, came out on the 4S. And I upgraded, and I saw a lot of people wanting to upgrade just to have Siri, and it was a big thing the year it came out, and then it's like it got obsolete like straight away.
But that's the thing. It was not a success. That the fact that they had Siri so early on and they never really tried to improve it is crazy.
Yeah. I agree. I mean, think about it. It could have been the first LLM, or the first,
It could, a working chatbot. I mean, it's like the Google Glasses. It's just, but it's not like the Google Glass because Google Glass was just ahead of its time. But Google, they had people working at Google, the guys that they bought now for $2.1 billion, Noam Shazir from Character AI. So he wanted to release the chatbot that they worked on internally in 2021, so 1 year before ChatGPT, and Google said no, they were too afraid to release it. Imagine Google Alphabet, how different of a conversation would have right now if they released a ChatGPT-like feature a year before ChatGPT.
Yeah.
That's the problem when you're too big, I think. Yeah. You're too comfortable, you're afraid.
And now we turn into the All-In podcast, but so if we agree that like Apple has to acquire another company to have like a product innovation, but they can't because the regulatory environment, like, can you think if Apple now would try to buy Tesla, or, I mean, okay, it wouldn't work, but let's say Rivian. Yeah, exactly. Like it would never go through because Apple is too big. So it's like they have to innovate from.
Hold on. Before you continue, I am not Jason if we're doing the All-In podcast again. I was on the phone with Steve today, and we were ironically talking about the All-In podcast, and both of us were like, dude, fucking Jason's annoying, bro. So the fact that chat says I am not Jason, there's no way in hell.
You don't have DTS. You don't love Trump, but you definitely don't have DTS.
Correct.
So it's Chamath.
I would rather be the scamoth that is Chamath over. I love Chamath, but yeah, it was a little scammy what he did in 2021. I'd rather be him over Jason, dude. I cannot be Jason. Anyway, continue, Neil. Go ahead.
No, I think it's Vince with his Rivian and Apple.
Yeah, so I think that, so basically, like, Apple cannot acquire companies because they're in the regulatory environment doesn't acquire it, and then so the innovation has to come within. But as you said, like, they're too big and they're too afraid to really innovate.
Okay, so here's the question: who should Apple buy right now? Because I already have my answer. Who do you guys think?
You're going to say Lucid. I'm going to say Rivian.
Oh, I was going to say something different.
Oh.
It'll be a big one. They probably can't afford them. They could have afforded them 2 years ago, but I don't know if they would have sold. Well, I have two in mind. So the least popular one is Disney.
Like that. I thought only cars.
I was going to say Netflix 5 years ago.
So I was going to say Netflix after that. Yeah.
Yeah.
No, if we talk about general, I would have said the same with Disney, because there were some rumors, I think, a while back.
I'm not bullish Disney at all. I think Mickey Mouse is going to be irrelevant in 10 years. Like, I really don't see Disney's moat at all. I think you're buying a parks business, which is a horrible business. Content
It's
is
a
not
very good
interesting.
business. It's a very good.
I think it's a
If the co-
horrible business, dude.
If the content is not woke, I think Disney would be.
Forget the wokeness of the content. Like just recreating the magic that is Mickey Mouse, which is like what Disney's basically living off of, that IP.
Man, Mickey Mouse is already dead a long time ago. That stupid mouse.
Look, Amit, if you go to Disneyland, it's not all Mickey Mouse. It's like
What else is there? What else is there?
Star Wars, Avengers, it's Star Wars.
No, but
Tron,
dude,
it's Avatar.
In 20 years, you guys think the Avengers are still relevant?
Superheroes?
I think so.
But they're done making the
for the last 40 years.
Yeah, but they can make new films and new, like that's what I'm saying.
Yeah, but Vince, it's hard to make really good content. That's
if you're woke, yes, it's super hard. if you pull your head out of your butt and you actually just start making movies people want to watch.
Deadpool.
Yeah.
Wait, hold on. There's gonna be a stupid question, but isn't Avengers over because they have the end game, right? So it's done. Right?
No, it's not done. You can always make more superhero movies. Now that the multiverse exists, you can go in alternate realities. You can have Iron Man, Robert Downey Jr. as Doctor Doom. Super exciting. Don't get me started on this, because then we're going to go for
wait, hold
another
on. So
6 hours here.
So I Love You 3000 was not the end of the franchise, is what you're saying?
Nope.
Okay, so if somehow they recreate the magic of the past decade of the Avengers, I guess they can stay relevant. But I don't think paying 195 billion for Disney is that exciting. I do think paying 150 billion for Netflix 5 years ago would have been the move, but they failed.
Yeah.
And now Netflix is too.
And Amit, I think that again, Disney definitely, like, look, I watched Lion King with my dad when I was, I don't know how many years old, and then now I watched it with my own kids. And like all the generations, like there is something there. Like it's, I cannot explain it. It's like a generational experience that you.
Yes, we love seeing Scar kill his brother over and over.
Exactly. And there is like certain of these culture movies. And again, if they stop with the woke BS, I think, because the parks business is a super profitable business.
It's not a good business though.
It is a super good business.
No, man, it's an incredible business.
All of those expenses.
It's an ATM. It's an Yeah, but you have also income. It's not just expenses.
The parks, the cruises.
The cruises. Yeah. So as long as you can come up with generational movies, which by all accounts, like you have the best talent, the best writers, like it should be possible. And when you have these jackpots, like maybe not every movie is a jackpot, but it's enough if like 1 in 10 is a jackpot that lives on 20, 30 years that you can build on. I mean, it's a cash printing machine. You just
but again, it comes down to the thesis. Can they build the IP that makes little kids want to ask their parents to go to the park, right?
And that is why I'm not investing, because I think that currently they are like down with the mind virus and being woke. You cannot make good movies. Like I would not make my kids watch non-family friendly movies. You know, that is with the and then it's
Lord of the Rings summit. Lord of the Rings.
Yeah.
So realistically, we got 1 minute left until the earnings call. What company do you think they could actually buy today that's reasonable enough to justify? It's not Disney, not Netflix. Is there anything else in mind? I don't think it's Lucid, dude. I don't think they want to be in the car business.
I mean, Rivian, no. they could buy, or some self-driving something where they could do.
They're not going to buy big companies. They're going to buy small companies that can make their existing products and maybe future products a little bit better, right? Chips wise, or maybe screen wise, or something.
I've been saying to buy Peloton for like 2 years now. Everyone hates this opinion, but I think it's not horrible.
It's not horrible.
No, it's not horrible. It's cheap. Plus,
it's $1 billion. It's $1
billion. Fitness thing. You can put it in the services category.
But if you think with innovation, Neil, like that, because we were talking about like Apple completely changing around and innovating, it has to be something that has the potential to be really, really big, and it has to be new. So I think that buying a small company so that your Apple Watch tracks a new measure, it doesn't cut it as innovation, right?
Yeah, I'm just thinking of some growth because right now they have no growth. So maybe Peloton can give them some growth. I think Perplexity is a great idea. Like, I think because they're probably going to compete against Google when it comes to search eventually if this lawsuit goes through. But I don't think Perplexity would sell. I think Perplexity thinks they can become a multi-$100 billion company. Right now they're $9 billion. So
weren't they going to invest in OpenAI, Apple?
They pulled out.
They pulled out.
And by the way, the
Perplexity.
OpenAI CTO is starting a new startup. I don't know if you guys heard about that.
Yeah, everybody's starting a new startup. When they leave, it's like
guys, let's us start a new AI startup, something with stocks, and we get a lot of financing, and then we just sell the shares.
We have to build it on AIP, or else Chad is gonna kill me. So
he can help us. We can pay him with stock-based compensation.
All right, this call is starting now. I think it's 5:30, but it's not officially live yet. Should be starting very soon. We refresh.
Who said this?
Yeah.
Should Uber buy Waymo? I heard this question. I don't know when. A couple of days ago.
Does that make sense or no? I don't think
I'm asking you.
I mean, if Tesla can solve full self-driving, because the Waymo is, how do you call it? I don't think it's like with the $130,000 for the sensor suite.
I don't think it's 120 anymore. That's the same number I've been seeing for the last 3 years. People keep posting it.
But what do you think it is? Because Tesla is like it's a few thousand, right? Like it's
but the Uber CEO said that now it's costing way less. Plus, they don't make the cars, right? Waymo. It's a Jaguar. It's not Jaguar anymore. It's what is it? Zeekr and Hyundai. Now it's a partnership, I think. So they make the cars. So Waymo just has to spend.
Bro,
on the
what if
Apple?
What if Apple buys SoFi? They have all the consumers, neo-friendly bank. They already have the partnership with Goldman Sachs. They're into the financing world. What if giving mortgages to people and loans is their next growth? I mean, maybe. All right, looks like we're starting.
Apple mortgage.
Okay, I think
you get the phone with your house.
Everyone, and welcome to Tesla's third quarter 2024 Q&A webcast. My name is Travis Axelrod, Head of Investor Relations, and I'm joined today by Elon Musk, Vaibhav Taneja, and a number of other executives. Our Q3 results were announced at about 3 p.m. Central Time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. Before we jump into Q&A, Elon has some opening remarks. Elon?
Thank you. So to recap, as someone saying, it's something that automotive industry are seeing year-over-year declines in order volumes in Q3. Tesla at the same time has achieved record deliveries. In fact, I think if you look at EV companies worldwide, to the best of my knowledge, no EV company is even profitable. And I'm not, to the best of my knowledge, there's no EV division of any company, of any existing auto company that is profitable. So it is notable that Tesla is profitable despite a very challenging automotive environment. And this quarter actually is a record Q3 for us. So we produced our 7th million vehicle actually just yesterday. So congratulations to the teams that made it happen at Tesla. That's a staggeringly immense amount of work to make 7 million cars. Let's see, and we also have the energy storage business is growing like wildfire with strong demand for both Megapack and Powerwall. And as people know, on October 10th, we laid out a vision for an autonomous and electric future that I think is very compelling. Something, the Tesla team did a phenomenal job there with actually giving people an opportunity to experience the future, where you have humanoid robots walking among the crowd, not with a canned video presentation or anything, but literally walking among the crowd, serving drinks and whatnot. And we had 50 autonomous vehicles. There were 20 Cybercabs, but there were an additional 30 Model Ys operating fully autonomously the entire night, carrying thousands of people doing, with no incidents the entire night. And for those who went there, it's worth emphasizing that the Cybercab had no steering wheel or brake or accelerator pedals, meaning there was no way for anyone to intervene manually, even if they wanted to, and the whole night went very smoothly. So, regarding the vehicle business, we are still on track to deliver more affordable models starting in the first half of 2025. This is, I think, probably people are wondering, well, what should they assume for vehicle sales growth next year? And at the risk of to take a bit of risk here, I do want to give some rough estimate, which is, I think, 20 to 30% vehicle growth next year. Notwithstanding negative external events, like if there's some force majeure events, like
holy crap,
some big war breaks out or interest rates go sky high or something like that, then we can't overcome massive force majeure events. But I think
10%.
with our lower cost vehicles, with the advent of autonomy, something like a 20 to 30% growth next year is my best guess.
Oh my God.
And then Cybercab reaching volume production in 26. We do feel confident of Cybercab reaching volume production in 26, not just starting production, but reaching volume production in 26. And that, that should be substantial growth. We're aiming for at least 2 million units a year of Cybercab. That'll be in more than one factory, but I think it's at least 2 million units a year, maybe 4 million ultimately. These are just my best guesses, but if you ask me what my best guess is, those are my best guesses. The 46, the cell 4680 lines, the team is actually doing great work there. The 4680 is rapidly approaching the point where it is the most competitive cell. So when you consider the fully landed, the cost of a battery pack fully landed in the US, net of incentives and duties, the 4680 is tracking to be the most competitive, meaning lower cost per kilowatt hour fully considered than any other alternative, which is not quite there yet, but we're close to being there, which I think is extremely exciting. And we've got a lot of ideas to go well beyond that. So I think if we execute well, the 4680 will have the Tesla internally produced cell will be the most cost competitive cell in certainly North America. A testament to a tremendous amount of hard work there by the team. So that's a rule. We'll continue to buy a lot of cells from our competitors. Our intent is not to make cells just internally. So I don't want to set off any alarm bells here. We're also increasing substantially our vehicle output and our stationary storage output. So we need a lot of cells. And most of them will still come from suppliers, but I think it is some good news that the Tesla internal cell is tracking to be the most competitive in the US. So with respect to autonomy, as people are experiencing in the cars, really from week to week, there are significant improvements in the miles between interventions. So with the new version 12.5, the release of Full Self-Driving and Cybertruck, the combining the code into a single stack so that the city driving and the end-to-end highway driving are one stack, which is a big improvement for the highway driving. So it's just all neural nets, and the release of actually Smart Summon. We try to have a sense of humor here at Tesla. And we're also, so that's 12.5. Version 13 of FSD is going out soon. Ashok will elaborate more on that later in the call. We expect to see roughly a 5 or 6 fold improvement in miles between interventions compared to 12.5. And actually, looking at the year as a whole, the improvement in miles between interventions, we think will be at least 3 orders of magnitude. So that's a very dramatic improvement in the course of the year, and we expect that trend to continue next year. So the current internal expectation, for the Tesla FSD having longer miles between interventions than human is the second quarter of next year, which means it may end up being the third quarter, but it's next. It seems extremely likely to be next year. Sure, do you want to say anything about that?
Yeah, when measuring miles between critical interventions, yeah, like you mentioned, Elon, we already made a 100x improvement with 12.5 from starting of this year, and then with V13 release, we expect to be 1000x from the beginning, from January of this year on my production release software. And this came in because of technology improvements, going to end-to-end, having higher frame rate, partly also helped by hardware force, more capabilities, so on. And we hope that we continue to scale the neural network, the data, the training compute, etc. By Q2 next year, we should cross over the average human miles per critical intervention, or like collision in that case.
I mean, that is just unvarnished our internal estimate.
Yes. Yeah.
So that's no sandbagging or anything else. Our internal estimate is Q2 of next year to be safer than human, and then to continue with rapid improvements thereafter. Now a lot. Vast majority of humanity has no idea that Teslas can drive themselves. So, especially for something like a Model 3 or Model Y, it looks like a normal car. So you don't expect a normal car to be able to be intelligent enough to drive itself. Yeah, Cybercab looks different. Cybertruck looks different, but Model Y and Model 3 they're good-looking cars, but they look fairly normal. You don't expect a fairly normal-looking car to have the intelligence, enough AI to be able to drive itself, but it does. So we do want to expose that to more people, and so we're doing, every time we have a significant improvement in the software, we'll roll out another sort of 30-day trial, so to encourage people to try it again. And we are seeing a significant improvement in adoption. So the take rate for FSD has improved substantially, especially after the 1010 event. Yeah, so there's no need to wait for robotaxi or Cybercab to experience full autonomy. We expect to achieve that next year with our existing vehicle lineup.
For what it's worth, actually, Smart Summon gives a small taste of what it's going to look like the car able to drive itself to the user within private parking lots. Currently, it's speed limited, but then it's going to quickly be increased. And we already had more than 1 million usage items of Smart Summon.
Yep. So, and we have for Tesla employees in the Bay Area, we already are offering a ride-hailing capability. So you can actually use with the development app, you can request a ride and it'll take you anywhere in the Bay Area. We do have a safety driver for now, but the software required to do that, we've developed. And I mean, David, do you want to elaborate on that?
Yeah, sure. It's David. We showed some screenshots of this in the Q1 shareholder deck. And yeah, this is real. We've been testing it for the better part of the year, and the building blocks that we needed in order to build this functionality and deliver it to production, we've been thinking about and working on for years. It just so happens that we've used those building blocks to deliver great features for our customers in the meantime, such as sharing your profile, synchronizing it across cars, so that every single car that you jump into, whether it's another car that you own or a car that somebody's loaned to you or a rental car that you jump into, it looks exactly like yours. Everything synchronized, seat mirror positions, media, navigation, everything is the same, just what you would expect from one of our robo-taxis. But we gave that functionality to our customers right now because we built it intending for it to be used in the future. But we're releasing that functionality now. All the end-to-end cybersecurity that we knew we were going to need to deliver that functionality, sending a navigation to destination from your phone to the vehicle. And so, you're doing that now with the ride-hailing app, but it's something that we've made available to customers for years. Seeing the progress on a route in the mobile app, that's something you'll need for the ride-hailing app, but again, we released it in the meantime. So it's not like we're just starting to think about this stuff right now while we're building out, the early stages of our ride-hailing network. We've been thinking about this for quite a long time, and we're excited to get the functionality out there.
Yeah, and we do expect to roll out ride-hailing in California and Texas next year to the public. Now, the California is there's quite a long regulatory approval process. I think we should get approval next year, but it's contingent upon regulatory approval. Texas is a lot faster, so it's I'd say like we'll definitely have it available in Texas, and probably have it available in California, subject to regulatory approval, and then and maybe some other states actually next year as well, but at least California and Texas. So I think that'll be very exciting. That's really a profound change. Tesla becomes more than a sort of vehicle and battery manufacturing company at that point. So we published our Q3 vehicle safety report, which shows one crash for every 7 million miles of autopilot. That compares to the US average of one crash roughly every 700,000 miles. So it's currently showing a 10x safety improvement relative to the US average. And we continue to expand our AI training capacity to accommodate the needs of both FSD and Optimus. We are currently not training compute constrained. That's probably the biggest limiting factor is that the FSD is actually getting so good that it takes us a while to actually find mistakes. When you start getting to where it can take 10,000 miles to find a mistake, it takes a while to actually figure out which is this build, is this software build better than is software build A better than software build B? It actually takes a while to figure it out because neither one of them are making mistakes. What take a long time to make mistakes. So that's actually the single biggest limiting factor is how long does it take us to figure out which version is better. So it's sort of high class problem. Obviously, having a giant fleet is very helpful for breaking this out. And then with Optimus, we showed a massive improvement in Optimus's dexterity and movement on October 10th, and our next gen hand and forearm, which has 22 degrees of freedom, which is double the prior hand and forearm. It's extremely human-like. It also has much better tactile sensing. It's really, I feel confident saying that we have the most advanced humanoid robot by a long shot. And we're moreover the only company that really has all of the ingredients necessary to scale humanoid robots because the things that what other companies are missing is that they're missing the AI brain, and they're missing the ability to really scale to very high volume production. So you sometimes see some impressive video demos, but they lack the localized AI and the ability to scale volume to very high numbers. As I've said on a few occasions before, I think Optimus will ultimately be the most valuable part of it. And I think it has a good chance of being the most valuable product ever made. For the energy business, that's doing extremely well. And the opportunity ahead is gigantic. The Lathrop Megapack factory reached 200 megapacks a week, which is now a 40 gigawatt hour a year run rate. And we have a second factory in Shanghai that will begin with a 20 gigawatt hour a year run rate in Q1 next year, so just next quarter. That'll also scale up. It won't be long before we're shipping 100 gigawatt hours a year stationary storage at Tesla. That'll ultimately grow, I think, to multiple terawatt hours per year. It has to actually, in order to have a sustainable energy future. If you're not at the terawatt scale, you're not really moving the needle. So if you look at our admittedly very complicated last master plan, which I think actually has too much detail, maybe I'll ask Grok to analyze it and
shorten it up.
Yeah, give us the TLDR on the last master plan. But we showed in that master plan that it is possible to take all of Earth to a fully sustainable energy situation using sustainable energy, power generation, and batteries and electric transport. And there are no fundamental material limitations. Like there's not some very rare material that we don't have enough of on Earth. We actually have enough of the raw materials to take all of human civilization, make it fully sustainable. And even if civilization dramatically increased its electricity usage, it would still be fully sustainable. You know, one way to think of the progress of a civilization, this may sound a little esoteric, but is percentage completion of Kardashev scale. So Kardashev scale 1 would be you're using all the power of a planet. We're currently less than 1% on Kardashev level 1. Level 2 would be you're using all the power of the sun. And level 3, all the power of the galaxy. So we got a long way to go. Long way to go. When you think in Kardashev terms, it becomes obvious that by far the biggest source of energy is the sun. Everything else is in the noise. So in conclusion, Tesla is focused on building the future of energy, transport, robotics, and AI. And this is a time when others are just focused on managing around near-term trends. We think what we're doing is the right approach. And if we execute on our objectives, and I think we will, Tesla, my prediction is Tesla will become the most valuable company in the world, and probably by a long shot. I want to thank the Tesla team once again for strong execution in a tough operating environment, and we're looking forward to building an incredibly exciting future. Thank you.
Great. Thank you very much, Elon. And Bob has some opening remarks as well.
Yeah, thanks. Our Q3 results were overall positive and once again demonstrate the scale to which businesses evolved over the years with the generation of record operating cash flows of $6.3 billion. Our automotive revenues grew both quarter-on-quarter and year-on-year. While we had unit volume growth, we did experience reduction in ASPs, primarily due to the impact of financing incentives. As a reminder, we are providing these incentives primarily using third-party banks and financial institutions and recognize the cost of these incentives as an upfront reduction to revenue. We released FSD for Cybertruck and other features like Actually Smart Summon, like Elon talked about in North America, which contributed 326 million of revenues in the quarter. We continue to see elevated levels of regulatory credit sales with over 2 billion of revenues so far this year. To expand on this, at an industry level, China continues to outperform US and Europe by a factor of 3. And if there is something to be learned from that, this gives a signal of what is to come in other regions as customers' acceptance of EV grows. And we feel that is the right strategy to build affordable and more compelling EVs. Our focus remains on growing unit volume while avoiding a buildup of inventory. To support this strategy, we're continuing to offer extremely compelling vehicle financing options in every market. When you compare any vehicle in our lineup with other OEMs, we believe our vehicles provide much better value, particularly when you consider the safety features, performance, and unparalleled software functionalities like David also talked about, include also what Ashok had talked about around autonomy, music options, parental controls, and much more. While every vehicle in our lineup comes up with these capabilities, there is an awareness gap, not just with buyers, but at times even with existing owners. We plan on making these more visible in our interactions with both existing and future customers. Automotive margins improved quarter-over-quarter as a result of FSD feature release discussed before. Increase in our overall production and delivery volume, continued benefit from commodity pricing, and more localized deliveries in region, which resulted in lower freight and duties. Sustaining these margins in Q4, however, will be challenging given the current economic environment. Note that we are focused on the cost per vehicle, and there are numerous work streams within the company to squeeze out costs without compromising on customer experience.
Yeah, something that's hopefully a helpful macro trend is if there's a decline in interest rates, this has a massive effect on the automotive demand. The vast majority of people the demand is driven by the monthly payment. Can they afford the monthly payment? So we most likely will see continued decline in interest rates, which helps with affordability of vehicles.
Yeah, I mean, that is one trend which we observed in the industry that, because of the affordability being impacted because of interest rates, people are holding on to the cars longer, especially in the US. And that is actually having an impact on the overall industry too. As we discussed earlier, as we discussed in prior quarters, energy deployments fluctuate quarter-over-quarter due to customer readiness, location of orders being fulfilled, and not necessarily an indicator of demand or production within the quarter. While we did see a decline in Q3, we expect to grow deployments sequentially in Q4 to end the year with more than double of last year. Energy margins in Q3 were a record at more than 30%. This is a function of mix of projects being deployed in the quarter. Note that there will be fluctuation in margins as we manage through deployments and our inventory. Our pipeline and backlog continue to grow quarter-over-quarter as we fill our 2025 production slots, and we're doing our level best to keep up with the demand. Just coming back on automotive margins, I talked about what is happening. One other thing which I want to also share is that we will continue to keep whatever we can to squeeze, like I said before, about squeezing out the cost. But this is something which we also are very capable of. I mean, just in Q3, we reached our lowest cost per vehicle. And that is a trend which we want to keep focus on. Then going on to service and other, we continue to show improvements in Q3. This was a result of better performance both in our service business, which includes collision, part sales, and merchandise, and continued growth in supercharging. These fleet-based revenues will continue to grow as the overall fleet size increases. Our operating expenses declined quarter-over-quarter and on a year-on-year basis. This is partially due to the restructuring we undertook in Q2. Cost saving from these initiatives were partially offset by increase in costs related to our AI efforts. We've started using the GPU cluster based out of our factory in Austin ahead of schedule and are on track to get 50K GPUs deployed in Texas by the end of this month. One thing which I'd like to elaborate is that we're being very judicious on our AI compute spend too, and saying how best we can utilize the existing infrastructure before making further investments. On the CapEx front, we had over $3.5 billion in the quarter. This was a sequential increase largely because of investments in AI compute. We now expect the CapEx for the year to be in excess of $11 billion. We shared our vision for the future at the We Robot event at the beginning of the month. The Tesla team is hyper-focused on delivering on that vision, and all efforts are underway to make it a reality. While we've achieved significant progress this year, it will take time to get this as we pioneer new and incredibly complex technologies and navigate a fragmented regulatory landscape. Future is incredibly bright, and I want to thank the Tesla team once again for all their help.
Great. Thank you very much, Vaibhav. Now we'll go to investor questions. The first one is Tesla still on track to deliver the more affordable model next year, as mentioned by Elon earlier? And how does it align with your AI and product roadmap?
Sure. I mean, as Elon and Vaibhav both said, we are in plan to meet that in the first half of next year. Our mission has always been to lower the cost of our vehicles to increase the adoption of sustainable energy and transport. Part of that is lowering the cost for current vehicles, which is where all of the personally owned vehicles that we sell today come in. But the next stage in that really, as it fits into AI roadmap, is when we bring in robotaxis, which lowers the initial cost of getting into an EV. And that's really where we see the marriage of EV roadmap and the AI roadmap.
Yeah. It'll be like with incentives sub 30K, which is kind of a key threshold.
Great. Thank you very much. Similar question next. When can we expect Tesla to give us the $25,000 non-robotaxi regular car model?
We're not making it on robot.
Yeah, all our vehicles today are robotaxis.
I think we've made very clear that we're the future is autonomous. I mean, it's going to be, you know, and I actually said this many years ago, but that in my strong belief, and I believe that is panning out to be true, so and it'll be very obvious in retrospect, is that the future is autonomous electric vehicles, and non-autonomous gasoline vehicles in the future will be like riding a horse and using a flip phone. It's not that there are no horses. Yeah, there are some horses, but they're unusual. They're niche, and you know, so it just everything's going to be electric autonomous. I think this is blind, like it should be frankly blindingly obvious at this point that is the future. So a lot of automotive companies, most automotive companies have not internalized this, which is surprising, because we've been shouting this from the rooftops for such a long time, and it will accrue to their detriment in the future. But all of our vehicles in the future will be autonomous.
Even today.
Yes, all the vehicles that we've really made, all the 7 million vehicles, the vast majority are capable of autonomy. You know, we're currently making on the order of 35,000 autonomous vehicles a week. If you compare that to, say, Waymo's entire fleet, they have less than 1,000 cars. We make 35K a week.
Yeah, and our cars look normal.
Yeah, they mostly look normal. The Cybertruck looks,
yes,
thankfully, you know, looks abnormal. And then the Cybercab / robotaxi, you know, we wanted to have something futuristic looking. I think it does look futuristic. And it's worth noting with respect to the Cybercab, it's actually not just a revolution in vehicle design, but a revolution in vehicle manufacturing that is also coming with the Cybercab. The cycle time, like the units per hour of the Cybercab line is like, this is just really something special. I mean, will be half order of magnitude better than other car manufacturing lines. Like not in the same league is what I'm saying. Not in the same league. So it's and I said several years ago that maybe the most the hottest Tesla product to copy will be the factory. You can't just like buy a factory.
You can't reverse engineer a factory. It's have to buy it.
Yeah, it's like if we can, and as we're rapidly evolving in manufacturing technology. So anyway, there's like basically I think having a regular 25K model is pointless.
Yeah,
it would be silly. Like it would be completely at odds with what we believe.
In an autonomous world, what matters is the lowest cost per mile of efficiency of that vehicle, and that's what we've done with the rope taxi.
Exactly, autonomous. It's fully considered cost per mile is what matters. And if you try to make a car that is, essentially a hybrid manual automatic car, it's not going to be as good as a dedicated autonomous car. So yeah, Cybercab is just not going to have steering wheels and pedals. It's fully designed optimized for autonomy. But no, it'll cost on the order of cost roughly 25K. So it is a 25K car, and you won't be able to buy one on it exclusively if you want. So just won't have steering wheel and pedals. You don't need it.
Great, thank you very much. The next question is, what is Tesla doing to alleviate long wait times at service centers?
So we aim on solving problems at the source, so at the factory before they can even affect our customers. We believe the best service is no service, and
it really is.
Don't even have them.
If the car doesn't break,
yeah, exactly.
That's the best thing.
Don't see anyone with the Tesla shirt. You either do it remote, fix the issue upstream, or do it remotely, do it through software. They can be at work or at home, and the car can be parked, and we address and fix the issue. And we've partnered the field with service to make sure we're looking at the same issues. And additionally, just in Q3 and Q4 of this year alone, we have opened and will open in total at nearly 70 locations. And in North America, we significantly expanded the size of each location and have doubled the size last year compared to this year.
Yeah, I think there's like actually a lot of merit to having large service centers, because you can have specialization of labor. You can start to approach. It should be more factory-like. Where you can have dedicated lanes for particular types of service, and it's way easier for somebody to become expert in a few different types of repairs than in every repair.
Exactly. This has helped us with the base. Instead of these heavy repairs, like clogging up a lane, there's dedicated lanes for different type of repairs. And so it's throughput matters and really treating it like a factory.
This is where Tesla's structure, I think, Tesla has a structural advantage relative to the rest of the auto industry, because we make the cars and we service the cars, whereas I think there's a bit of a conflict of interest with the dealer model and the sort of traditional OEM and dealer model, where the dealerships make most of their money on service, and so they obviously are disincented to reduce the servicing cost. Whereas in our case, we are incented to reduce the servicing cost because we carry that servicing cost, and we've got a good feedback loop with our cars.
The best.
Exactly.
Yeah.
Maybe we review with the factory, with the service leaders together, and send back people from the factories to the field and field to the factory to see it firsthand.
Exactly.
Provide suggestions for manufacturing as well as for engineering on design.
Yeah. So I view this as a fundamental structural advantage of Tesla versus the rest of the auto industry.
Also doing a bunch of work on the software side, not only to automate, diagnostics, so identifying what needs to be done to a car before it comes into service, but also automating all of the preparation work and aligning all the resources that are necessary in order for the car to be very efficiently worked on once it arrives. So the parts are there, like the lift is scheduled, the technician schedule, like everything's
Yeah, like a car says, this is what's wrong with me, and tells the service center.
The car
get everything ready in advance.
Yeah, please fix me, and this is what's wrong.
Yeah, this is what I recommend you do now.
Yeah.
Instead of customer trying to translate, the car is telling us directly, and we're pulling that. Yeah.
Yeah, you don't need, most of the time you don't need to diagnose the car
exactly
when it arrives. The car, this is like, again, a fundamental technology advantage and structural advantage compared to the rest of the auto industry.
I think it's underappreciated as to what all we are able to do.
Yeah.
And that's why, because like you said before, most of our cars, except for Cybertruck, look the same.
Yeah.
Right? So people don't realize that it has so much capability.
Yeah. They look better than other cars, but they're not like obviously like super futuristic.
Yes.
Great. Thank you very much. The next question is, please provide an update on the Semi. What will the next stage of growth look like, and when will FSD be ready?
Sure. So as we posted in the earnings deck, we're progressing swiftly on the build of the semi factory in our Gigafactory in Reno. We've released all our major capital expenditures for that program, and we're on track to start pilot builds in the second half of next year, with production starting the first half of 2026 and ramping really throughout the year to full production. Semi, growth will largely depend on our customers' adoption of the product.
Well, I don't think we're going to be demand limited, honestly.
Yeah, which I was going to say, which is like a no-brainer for the Semi, because it's really a commodity of total cost of ownership.
Yes, exactly. We have kind of ridiculous demand for the Semi.
In that world where it's about how much do I spend to move goods,
exactly,
cents per mile, it's a no-brainer.
Yeah, fundamentally, if you've got a Semi where the fully considered cost per mile per ton of transport is better than, say, a diesel truck, any company that doesn't adopt an electric Semi will lose. It's not a subjective thing. It's like of whether do you like
it's a competitive.
I mean, we want the style. We want to have a beautiful semi truck, but frankly, if we made an ugly semi truck, it wouldn't matter.
And this is proving so in our fleets and in Pepsi's fleet partner. In fact, the Pepsi actually said last week their drivers don't want to go back.
Yeah. As soon as we give anyone the electric semi, it's like that's like the choice.
It's what they want to drive.
Yeah. That's like so the most senior, like their top drivers, they get to drive the Tesla Semi. And it's the thing they want to drive. It's super fun to drive.
It's also very easy to drive.
It's easy to drive, and it holds ass. Yeah. It's like fast.
Super fast. Maybe too fast.
Well, but I mean, regular like you've seen like the videos of where like the Tesla electric Semi can go uphill. Speeding past like the diesel truck,
or even cars.
Yeah, even cars. So it's responsive. It's you floor it, and that truck actually moves.
And that's a benefit not only for the driver and for the goods, but also for safety in terms of other drivers on the road. You don't get stuck behind a Semi. You're not in a slowdown situation in the on ramp. I mean, how that plays into, FSD, which is the second part of the question. All of the Semis have been, since the couple hundred we've deployed already, and the ones that we'll be building next year and throughout the future, have all of the hardware and the cameras necessary to deploy FSD. And we're currently training with that small fleet that we have. And as soon as the fleet is trained and the neural nets are up, we'll get FSD onto that platform.
Yeah, I mean, it'll be a massive improvement in driver fatigue, because and driver safety. We've got sort of the anti-jackknifing software. You don't have to worry about your brakes overheating if you go down a steep hill, because we use regenerative, like that energy goes back into the pack.
Actually, when we leave Reno,
it's just like it's like radically better than a diesel Semi. It's why the drivers love it.
Yeah.
Great, guys. Thank you very much. Our next question is, when will Tesla incorporate X and Grok in all of the Tesla vehicles?
Big question.
Well, I mean, these are relatively small fry things, but yeah, I think we'll keep expanding, what is available in the car on the screen, and also improving like the browser, so like just generally you can access anything you want in the car. In fact, for the Tesla, once you get to full autonomy, you actually want fully a system that is can do anything. Like if you want to browse the internet, if you want to ask AI questions, if you want to watch a movie, if you want to play a video game, if you want to do some productivity thing, you can do anything you want in an autonomous vehicle because you don't need to drive. So that's why the Cybercab's got a nice big screen and a great sound system, so you can watch a great movie with. It's like being like in a
personal movie theater.
Yeah, personal movie theater. It's awesome.
Yeah, this is why we've been building this functionality, adding gaming to the car, adding movies and other, all sorts of different media applications to the car, because,
the cars
that's what you're gonna, the cars that we build today.
There's some
That's
really
what we-
fun games, by the way. If people haven't tried it, there's like Castle Doombad and Polytopia and a bunch of really fun games in the car.
Yeah, we're constantly looking at, what features to add next, and we're paying attention to what's most commonly requested by our customers.
Yeah, play Castle Doombad. You won't regret it.
Great. Thank you guys very much. The next question is, Elon mentioned unsupervised FSD in California and Texas next year. Does that mean regulators have agreed to it in the entire state for existing hardware 3 and 4 vehicles?
No, as I said earlier, California loves regulation.
But they have a pathway.
Yeah, I mean, there's a pathway. Obviously, Waymo operates in California, so there's just a lot of forms to fill out and a lot of approvals that are required. I mean, I'd be shocked if we don't get approval next year, but it's just not something we totally control. But I think we will get approval next year in California and Texas, and towards the end of the year, it will branch out beyond California and Texas.
I mean, I think it's important to reiterate this, like homologating or certifying a vehicle at the federal level in the US is done by meeting FMVSS regulations. All our vehicles today that are produced that are autonomous capable meet all those regulations. The Cybercab will meet those regulations. And so the deployment of the vehicle to the road is not a limitation. What is a limitation is what you said at the state level, where they control autonomous vehicle deployment. Some states are relatively easy, as you mentioned, for Texas.
Yeah.
And other ones have pathways, like California, that may take a little longer. Other ones haven't set up anything yet. And so we will work through those state by state and get it.
I do think we should have a federal.
I agree.
Like the autonomous vehicles should be approved. It should be possible to.
Congress, if you're listening, let's get a federal AV.
There should be a federal approval process for autonomous vehicles. I mean, that's how the FMVSS is
started and worked.
Federal motor vehicle. The FMVSS is federal.
Yeah. So I mean, in 2017 and 18, it's when regulators started looking at it, and it's really kind of stalled since then. But we would appreciate and would support helping out with those regulations.
It really needs to be like a national approval is important. If there's a Department of Government Efficiency, I'll try to help make that happen. And just for everyone, not just Tesla, obviously. But just we like some things in the US are state by state regulated. Like for example, insurance, and it's incredibly painful to do it state by state, 50 states. And I think there should be a national approval process for autonomy. So.
Great. Thanks, guys. The next question is, what is the plan for 2025?
I think we're just talking.
I mean, basically, we talked through this. There's a lot going on. Elon already mentioned that we're working on cheaper models to come out. I mean, there's work which the team is doing to get the factories ready today to try and make that happen.
Yeah. By the way, the amount of work required to make a lower cost car is insanely high. But like, it is harder to get like 20% of the cost out of a car than it is to design the car and build the entire factory in the first place.
Mm-hmm.
It's like excruciating, and there's not a lot of movies made about the heroes who got 20% of the cost out of a car. But let me tell you, there should be. Whoever got that is incredibly heroic.
It's little changes, and it's not like a
it's like there should be the heroes who got 20% of the cost out of a car. Is like, damn, I have a lot of respect for them. It's like movie. It's like, I think you probably could make a compelling movie, but it just no. Like, if people actually saw how hard it was to do that, you'd be like, whoa, that's damn hard.
Just yesterday, we were talking about potting.
Yeah, I mean, honestly, like literally, yeah. I mean, there's a lot of, when I do call it sort of like getting cost out of things, it's kind of like, it's like Game of Pennies. It's like Game of Thrones, but pennies. First approximation, if you've got 10,000 items, in a car, very rough approximation, and each of them costs $4, then you have a $40,000 car. So if you want to make a $35,000 car, you've got to get 50 cents on average out of the 10,000 items.
Every part.
Yeah. And it's like, and then obviously the best is you delete some parts. In fact, we found we're able to delete a lot of parts. I'm very excited about the Cybercab design and the how we're rethinking the design of a car for the Cybercab, designing it for ultra high volume production, and then designing a machine that builds the machine that I think is also revolutionary. And it's just that there's no other car company that's even trying to do what we're doing. Like, I've even heard of it, actually. In fact, I'm certain there isn't one. I think our new machine that builds the machine, like it's inherent, like it's designed to be like, five times better than traditional factory, like cycle time
and like part deletion, material movement. I don't think any other car company has the same level of like integration of thought that we have when it comes to like when you design a part from a white sheet of paper, who's going to make it, where is it going to be made, how's it going to be shipped, how's it going to be assembled into the vehicle. And like at any one point, if something is done in a silo, it becomes a bottleneck of either cost or time or efficiency. But with the robotaxi, the development, like we've done a good job on combining all that, and then like blowing up how it's made and saying it should be made this way, and rethinking it all so that it's the most efficient factory possible. That shows it will show in our CapEx efficiency when we deploy it. It shows in the number of parts, it shows in the simplicity of the vehicle, but also how it performs in terms of like end user state.
Yeah.
Just to close out, just on the energy front, also in 25, we will have started manufacturing at the Mega Factory Shanghai. We'll continue to increase our overall storage deployments with Powerwall 3. We plan to continue expanding our supercharging network, getting more OEMs on our network, 4680 cell ramp, as Elon talked about. That would keep going. And then we also will have our lithium refinery starting to produce. So there's a lot which is going on.
Great. Yeah, so many things.
Yeah.
I mean, crazy thing is like Tesla's winning basically on almost every single thing we're doing. If we're not winning now, we're on track to win. In arenas where there are entire large companies, that's the only thing they do.
Yeah, I mean it's a company. There are multiple companies within the company.
Yeah, Tesla's like many companies doing one.
Yeah.
Fantastic. Thank you, guys. Just a few more. What is going on with the Tesla Roadster?
Fun things.
Well, I just like to thank our long-suffering deposit holders of the Tesla Roadster. The reason it hasn't come out yet is because the Roadster is not just the icing on the cake; it's the cherry on the icing on the cake. And so, our larger mission is to accelerate the progress towards a sustainable energy future. Try to do things that maximize the probability that the future is good for humanity and for Earth. And so that necessarily means that like the things like that are kind of like dessert. We'd all love to work on the Tesla, the next gen Tesla Roadster. It is super fun, and we are working on it. But it has to come behind the more things that have a more serious impact on the good of the world. So just thank you to all our long-suffering Tesla Roadster deposit holders. And we are actually finally making progress on that. And we're close to finalizing the design on that. It's really going to be something spectacular. A friend of mine, Peter Thiel, and sometimes people think Peter Thiel and I are rivals. We're really good friends. But to be clear, Peter, was lamenting how the future doesn't have flying cars. Well, we'll see.
More to come.
Yeah.
Great.
Holy
Thank you very
crap!
much. The next one is quite similar to other questions we've had, so I might combine it with the final question. So briefly, could you just detail how Robotaxi will roll out? Will it start with a Tesla deployed fleet and then allow customers to add theirs on like a subscription model, and then will hardware 3 be capable of level 5 FSD?
Regarding the hardware 3, what we saw with 12.5 was it was easier to make rapid progress with starting with hardware 4 and figuring out the solution and then backporting it to hardware 3 instead of directly working on hardware 3, given that hardware 4 has more like fundamental hardware capabilities. I think that trend will continue into the next few quarters as well, where we first figure out the solution rapidly with AI4 and then backport it, write the kernels. It just takes longer to develop those things because it's not fundamentally supported in the hardware and it's emulated. But yeah, it's initially working on hardware 4, backporting it to hardware 3.
Yeah, so it's, I guess the answer is we're not 100% sure, but our as a short mention, because by some measures hardware 4 has really several times the capability of hardware 3. It's easier to get things to work with hardware 4, and then it takes a lot of effort to sort of squeeze that functionality into hardware 3. You know, there is some chance that hardware 3 does not achieve the safety level that allows for unsupervised FSD. You know, there is some chance of that, and if that turns out to be the case, we will upgrade those who have bought hardware 3 FSD for free, and we have designed the system to be upgradable. You know, so, and it's really what you know, just to switch out the computer type of thing. Like the cameras are okay, you know, they're capable, but anyway, we don't actually know the answer to that. But if it does turn out, we'll make sure we take care of those who have bought FSD on hardware 3.
Great. In the last few minutes that we have left, we will try to get in some analyst questions. The first question will be coming from Pierre Farragut at New Street. Pierre, please feel free to unmute yourself.
Thanks a lot, guys, for taking my question. I was wondering about like the compute you're ramping up. So you gave like interesting statistics on how much you have, and you said you don't feel your compute constrained. And I was wondering, you know, how you are putting to work this additional compute. Is that a game for you of creating like larger and larger models, like next generation of models that are larger, the way OpenAI go from GPT-3 to GPT-4? Or is that more like you're set on your model and you need to throw more and more compute to accelerate the pace of learning to improve reliability? And then I had a quick follow-up real quick on your rollout in Texas and in California next year. The plan as you see it today, is it to roll out like a fleet or two with cars that will start with like a supervisory, like some onboard supervision, someone sitting at the wheel just in case, and removing the supervisors progressively? Or are you aiming for going fully fledged without even a human supervisor when you get started?
Okay, well, I guess regarding I'll answer yeah, the first part of the question. The nature of real world AI is different from, say, an LLM in that you have a massive amount of context. So that like you've got case of Tesla 7 or 8 cameras that you know, 9 up to 9 if you include the internal camera that so you've got gigabytes of context, and that is then distilled down into a small number of control outputs. You know, whereas it's like you don't really, it's very rare to have. In fact, I'm not sure any LLM out there can do gigabytes of context. And then you've got to then process that in the car with a very small amount of compute power. So you know, it's all doable and it's happening, but it is a different problem than than what, say, a Gemini or an OpenAI is doing. Now, part of the way you can make up for the fact that the inference computer is quite small is by spending a lot of effort on training. And just like a human, like you, the more you train on something, the less mental workload it takes when you try when you do it. Like when the first time like a human starts driving, it absorbs your whole mind. But then as you train more and more on driving, get very good, then the driving becomes a background task. It only absorbs a small amount of your mental capacity because you have a lot of training. So we can make up for the fact that the inference computer is it's tiny compared to a 10 kilowatt bank of GPUs, because you've got a few hundred watts of inference compute. We can make up that with heavy training. So yeah, that's and then there's also vast amounts of the actual petabytes of data coming in are tremendous. And then sorting out what training is important with of the vast amounts of video training or video data coming in from the fleet, what is actually most important for training? That's also quite difficult. But as I said, we're not currently training compute constrained. Ashok, do you want to elaborate on
Yeah. Like you mentioned, the training helps both train larger models, also to train quicker. But in the end, we still got to pick which models are performing better. So the validation effort to picking the models, because the miles per intervention is pretty large, we have to drive a lot of miles to go in closed loop. We do have simulation and other ways to get those metrics. Those two help. But in the end, that's a big bottleneck. Yeah, that's why we're not training compute constraint alone. And there's other axis of scaling as well, which is the data, figuring out which data is more useful. That is an important task, and we're focusing on that.
Yeah.
So as it relates to the second part of your question, Pierre, about safety drivers and rolling it out, each state has different requirements that, in terms of how many miles and how much time you need to have a safety driver and not have a safety driver. We're going to follow all those. We're not going to violate whatever regulations are out there, but safety is a priority. But the goal is obviously when we're ready and safety is there, we'll remove all the drivers from the rideshare program.
Yeah, I mean, I guess like we think that we'll be able to have driverless Teslas doing paid rides next year, sometime next year.
All right, thank you. And our next question comes from Adam Jonas at Morgan Stanley. Adam, please feel free to unmute yourself.
Okay, thanks everybody. Just had a question about the relationship between Tesla and xAI. Many investors are still not clear how the work at xAI is truly beneficial to Tesla. Some even take the view that the two companies may even be in competition with each other in terms of talent and tech, and even your time, Elon. So what's your message to investors on that relationship between Tesla and xAI, and where do you see it going over time? Thanks.
Well, I should say that xAI has been helpful to Tesla AI quite a few times in terms of things like scaling up a lot of like training. Just even like recently in the last week or so, improvements in fault-tolerant training, where if you're doing a big training run and a node fails, being able to continue training and easy to recover from on a training run, xAI has been pretty helpful. But there are different problems. xAI is working on artificial general intelligence or artificial superintelligence. Tesla is trying to make autonomous cars and autonomous robots. They're different problems. So, yeah, I mean,
I think we've said this before also, like not all AI is equal, right? I mean, AI is a broad spectrum.
Yeah.
And we have our own swim lanes. Yes, there are certain things which we can collaborate on if needed. But for the most part, we're solving different issues.
Yeah, Tesla's focused on real world AI. And like as I was saying earlier, it is quite a bit different from an LLM. Because you have massive context in the form of video and some amount of audio that's going to be distilled very like with extremely efficient inference compute. I do think Tesla's the most efficient in the world in terms of inference compute, like because out of necessity, we have to be very good at efficient inference. We can't put 10 kilowatts of GPUs in a car. We've got a couple hundred watts, and it's a pretty well designed Tesla AI chip, but it's still a couple hundred watts. But there are different problems. I mean, it's just, like the stuff that XAI does, like when it's running inference. I mean, it is running inference, like it's answering questions, it's answering testing questions on a 10 kilowatt rack. It's like, can't put that in a car. It's a different problem.
Please no.
No, exactly. So, XAI is because I felt there wasn't a truth-seeking digital superintelligence company out there. Like that's what it came down to. That there needed to be a truth-seeking, like an AI company that is just very rigorous about being truthful. And so I'm not saying XAI is perfect, but that is that is at least the explicit aspiration. Even if something is, politically incorrect, it should still be truthful. I think this is very important for AI safety. So anyway, I think XAI it has been helpful to Tesla and will continue to be helpful to Tesla, but there are very different problems.
Great.
And I mean, like if you also think like what other car company has a world-class chip design team? Like zero. What other car company has a world-class AI team like Tesla does? Zero. Those were all startups that were created from scratch.
Great. Thank you, Elon. And I think that's unfortunately all the time that we have for today. We appreciate all of your questions and we look forward to hearing you next quarter. Thank you very much and goodbye.
All right, folks, that is it. Q3 earnings is officially over for Tesla as they marked the beginning of big tech earnings. Tesla right here up 12% after hours. We did hit 240. Right now it's at 239.03. Let's start off with you, Vince. Raw thoughts on the call and the overall earnings.
I love the call. I mean, the fact that they already have the ride-hailing service for their employees with safety drivers. I love that they're planning to increase the production 20 to 30%. There was a few very good key takeaways, but other than that, I found the conference call very dry and boring. Like Elon seems more excited speaking at rallies than he is on the Tesla earnings call, to be honest. But let's put it this way: I'm very strongly considering opening a very advanced option trade tomorrow on Tesla. It's very hard to see a downside from here with the company, with the macro setup, with their things starting to accelerate. I'm very bullish on the company.
Okay, Neil, your takeaway from the call?
I mean, it's a Tesla earnings call, so it's always going to be boring. I mean, we've been listening to these calls for quite a while, so we know what to expect. But yeah, no, some interesting comments were made. I wrote down a couple. Vince already mentioned the 20 to 30% vehicle growth in 2025 is pretty big. 2 million units per year of Cybercab. That's his best guess. So okay, take it with a grain of salt. 4680 cells batteries could be the most competitive ones in North America. So okay, great. But they did say that sustaining margins in Q4 will be challenging. So this is something we talked about before the call started. So okay, we'll see. We'll see how big of a hit that will be, or how small of a hit that will be. CapEx is in excess of $11 billion for this year. I think after 26 or something like that, it's expected to come down closer to 8 billion or so. But overall, yeah, I wrote some more stuff here, but overall, some good comments also on hardware 3. Finally, we got some answers about that. So he said there is some chance that hardware 3 does not achieve a safety level that allows for unsupervised FSD. If that turns out to be the case, we will upgrade those to who have bought hardware 3, so to hardware 4 for free. So that's good. That's good to know. Lower interest rates environment is great for the company. I mean, okay, that's a given. And Tesla Semi, my favorite part here. I mean, Tesla Semi will have FSD hardware. So when FSD is available, that will be ready. Plus, there is massive demand for Tesla Semi. Whoever drives it does not want to go back. I'm not really surprised, to be honest. So yeah, 2025 is probably going to be a very, very interesting year for the company.
I agree. My takeaways are this was a great call. Yes, it was definitely boring, but the street liked everything that Elon had to say. The numbers were good. The EPS beat was amazing, which is why you got that plus 8% stock right now, plus 12%. I mean, I think the shorts have to be really mad right now because first of all, it was kind of stupid to short it after it already took the massive nosedive from 1010. You would need some really bad numbers for this thing to get hit even worse in a relatively strong bull market that we have with interest rates coming down. And then 2, any piece of good news would get the stock to go higher. And we got a couple pieces of good news, even if they are more qualitative versus quantitative. So on the quantitative side, we got Cybertruck gross positive margins for the first time. That's bullish. You got the EPS beat. That's bullish. And then you got Elon saying the 2 biggest things in the call, which is number 1, this was in the first 5 minutes. I think we can grow vehicle deliveries 20 to 30% next year. If they get 512,000 vehicles in Q4, they're barely going to grow about 1.2%. So to go from 1% growth to almost 30%, I mean, that sounds like a pretty big deal. And obviously that would be led by that $25,000 new model. Even if it doesn't go into like deliveries, maybe the pre-orders themselves would be able to ramp up, and that's how they can start getting to the point where they can scale vehicle deliveries. So that's bullish. That's over 2 million units. And then 2, he said we should reach volume production of Cybercab in 2026. And he clarified by saying not just starting production, but volume production. And I think this was a little bit more of the details everyone wanted in the 1010 event of like, hey, when is it actually getting into production? Elon did caveat by saying this is my best guess of where he thinks the trajectory is going to go. But if he's right about that and they produce a couple 100,000 of those bad boys in 2026, then the framework has been laid for a serious 2027 launch of the robotaxi. And if that's the case, the street's going to price that in, and you're probably going to get some upside potential in 2025. So I thought it was a good call. I thought it was bullish. I think there's a reason the stock's up 12%. I think it can probably hold its gains. We got the election coming up. If Trump wins, I do think that's bullish for Tesla for a variety of reasons. But even if Trump doesn't win, if we get kind of a split Congress and Harris wins, I still think that the momentum of interest rates coming down and the actual guidance we got from Tesla here is enough to have us end the year out in a positive way. And who knows, maybe 300 by the end of the year, closing in on that 270 level is possible.
Yeah, no, I agreed. I mean, the Tesla Roadster comment was a funny one. I know some people are excited. Oh, flying cars. Elon is not a fan of flying cars. I think it's just going to be something that can maybe hover for a split second or something like that, and that's about it. But it's probably going to be a very, very cool car to own, which I don't think I'll have the funds to buy, unless of course, I don't know, Rocket Lab reaches $1 trillion or something. No, but yeah, good news is that my friend ordered a new Model 3 today, so maybe that should help Q4.
Yeah, I mean, it looks like I'm getting a Model Y with my dad, so that might help Q4 as well. But this was a good call, man. This was a good call. They answered a decent amount of questions. They explained the XAI relationship at the end. I thought he had a great response. Like XAI is not, it's not just about building an LLM, or Tesla's not about building an LLM, whereas XAI is more so about AGI. Tesla's about a real world application, and XAI's pursuit of AGI will help Tesla get to a real world application of AI. I actually think if I had to invest in XAI over OpenAI, forget the valuation, I would pick XAI any day, just because there is and forget the Sam Altman versus Elon Musk thing, because that makes it easier as well. But I mean, it just seems like XAI has a big either customer / partner in Tesla, and OpenAI has an LLM, and that's it, you know?
Yeah, and it doesn't even seem like they have Microsoft with them so much anymore. So, yeah.
I have a question for you guys. So, what do you guys think is I'm using you guys now to sway me out of what I'm planning to do tomorrow. But what do you guys see as a potential downside for Tesla from here? Because we have the macro, it's all for Tesla. We have they're introducing all these new products, you know, all for Tesla. Like, what would be like a bear case for the stock price?
I think a couple things. I think if Elon is talking about these things he said today in a very friendly way, and it's not actualized in terms of 20% growth vehicle deliveries or Cybercat production, then again, the street's going to buy up the stock thinking that he's telling the truth, and then it's going to come to the point where he's just like, sorry guys, it's taking more time. And I think that could be a headwind. I don't think he's being overly ambitious here. I think there is a real shot. So I think that could be one bear case. I guess the other bear case is if we get into a recession in 2025. And this is why, you know, for everyone who says it's, you know, analyzing the macro is stupid, it's like, no. For doing what Vince is about to do tomorrow, it's very important to analyze what is the probability of a recession. And I think given job growth is strong, Canada cut by 50 bips today. It looks like the United States will get to 3% by the end of the year. We shouldn't get a crazy recession, even if we get some pullbacks. And so, yeah, it's either recession or Elon's incorrect on his thesis right now about deliveries. But if not, I don't see the biggest bear case.
I would probably also add Kamala Harris winning is not going to be bullish for.
So if
Elon
the Republicans
specifically.
win the Senate or the House of Representatives, she's not going to be able to pass the corporate tax rates, right?
No, but
law
they could continue with attacks on him nonstop.
Yeah. They could delay the robotaxi launch, like not give. But at the same time, the Trump win. I don't know if you guys caught that when they were like, "Hope Congress is listening. We should have a federal mandate on the." I think if Trump wins, that's like in the bag. It's one phone call. Like, Trump, we need this. The U.S. is going to be, you know, #1. We need this to be ahead of China, and he will just be like, "Yeah." Done on an executive order. I don't know, like
I don't know. I have a feeling if Trump wins, tech and visionary CEOs and stuff like that will be more involved than otherwise. Just my opinion.
You guys remember it's a very interesting topic when we talked about like how many people Musk alienates with his politics, right? And then I brought up this point that, but the Democrats have all bought their Teslas, and it's the Republicans that are like this virgin territory of new customers. And I mean, if I watch my YouTube feed and see like Musk at the rallies, like I think he has gained quite some points with the Republicans. Like, I think that there's a lot of Tesla buyers.
Dude, it's so funny because now that my dad and I are thinking of really getting a Tesla, not for 1 second did we stop and be like, does Elon support Trump? Like, not for 1 second. We were like, can we afford the car? Like, that's what we're thinking about. We know the car is awesome. We don't give a shit about his politics. It is kind of insane that some people actually decided not to buy it because of his political views. But you're right. A lot of the liberal elites in New York and California drive a Tesla.
Yeah, they have already bought. Like, they're not going to be new customers, right? So, and I do think that there is a lot of Republicans who may have not ever thought about owning an EV that are looking now, you know, and so it's interesting. If Trump wins, it's very interesting for Tesla. And
I mean, it could accelerate the Muskonomy in the next 4 years. The other ones, I'm not saying that if Kamala Harris wins, then everything gets destroyed. No, I think a lot of things will get slowed down because he will have to deal with attacks each and every week, just like we are seeing right now, especially since he bought Twitter. So And it's not just in the United States. I mean, we've seen the leaked documents, right? Kill Musk's Twitter was the #1 thing. We're like, what the heck is this? This is insane.
I think you're right, dude. I mean, if Harris wins, I think they are not going to be friendly to Elon. And outside of all the other political reasons people might like Trump or hate Trump or like Harris or hate Harris, this one topic on if you're a Tesla investor, Elon's going to have a tougher time getting the things he wants to get done from a regulatory perspective and also from a social perspective. Imagine they try to regulate Twitter. I mean,
Also,
like
from a court perspective, like instead of like running his companies, he's going to be in depositions and courthouses and on frivolous lawsuits.
You know, as you guys say this, it makes more sense why he's literally giving $1 million a day to people in Pennsylvania to at least sign up to vote. Like, he's really trying to get Trump in. And it's because he knows there's going to be an ROI on Trump, right? Otherwise, he would not be wasting his time doing this.
Yeah.
Or he knows it's either that or he's screwed.
Amit,
So-
give us Europeans a barometer or a temperature in the US, because from here it seems like the T-man is going to how do you call it? Take this home. But
Really? From where I am, the T-man is not. But then again, it's a BS,
I'm not saying if
news
Belgium
reporting.
would vote. I'm saying if
No, I know, but they think that he is still in a losing spot here.
Really?
I was talking to Steve about this today. I think it's going to be 50-50, dude. Like, I do think there is I know a lot of the polls are saying Trump's winning, but then you get other polls that are saying, like, it's just one of those things where I don't even know what polls to trust. I don't know if the betting markets are actually accurate to trust. I do think it's going to come down to 5 states, and Pennsylvania is one of them.
Yeah. I watched the video by PBD, this Patrick, or like on his channel, this Valuetainment, and they made a very good point of like looking at which polls were the most accurate the last election time, and then they're giving more weight to those polls because they have been historically so accurate.
Yeah.
And all those polls have Trump like up 3, like even winning the popular vote. So they're like, in their analysis, they were saying that it's like 70-80% chance of a Trump victory. But
I mean, one thing to
agree.
remember, in 2020, Trump lost by like a couple thousand votes in like 2 or 3 states or whatever, right? It was very close. I mean, the popular vote also was a very slim margin. Like, it was 81 million to 80 or some. It was very, very slim. So it's not like America has changed that much, in my opinion, since 2020, to the point where if there was a razor-thin margin in 2020, there would be an exorbitant margin for the Democrats 4 years later, or for the Republicans. It feels like that razor-thin margin would still exist. If anything, the weird part about Harris's run is that she's supposed to be touting the accomplishments of the Biden administration because she was part of it. And the sentiment I'm getting from her is her kind of saying, like, we're going to change things. And the question is, like, shouldn't you want more of the same, right? But the incumbent's not running. It's the incumbent's vice president, but she's not necessarily reaffirming that we've done a good job, like, give us 4 more years to do a better job. She's trying to tout change. And logically speaking, the reason it's hard for incumbents to win is because the guy or the girl promising change gives a new vision, and Trump is promising some type of change. And so you could argue that people who want a change in the country, even if it's a different direction, might end up going for Trump. But I don't know. I think it's going to be razor thin.
I think it's going to be a couple of % difference. Like, it's not going to be, oh, we have to wait another week until this state counts the lost votes or whatever. I think
just
now also with RFK, you get some support from undecided folks. And I don't know. I still don't see how 80 million folks can be convinced that the last 3-something years were amazing and they want another 4 years of the same. But I don't know.
What's interesting with the US election system is that even if the difference is like insanely small, it can still be like an electoral landslide because you have this winner take it all system, which is really good. Coming from Sweden, this is like political nerd talk, but for the last 3 or 4 elections, like, we have had a scene where there's like 9-ish parties in Sweden, and the results were so even, like left, right, middle, that it was like they were unable to make a government because it was like nobody had a majority, and I was like, damn, the US system is quite smart that yes, like the small margin makes such a difference, because then you can actually have a government that can do things, you know?
Yeah, and this is the map from 2020, and you know the reason you're talking about, Vince, is smart system is some people hate it, but other people's, like the founding fathers, did think that the Electoral College would be the best way to preserve democracy. Trump's got to flip Michigan, Wisconsin, Minnesota, Georgia,
Pennsylvania.
Arizona, or Nevada.
Pennsylvania is 20.
And Pennsylvania, correct. If he can flip 3 or 4 out of those 7 that I mentioned, he's got a shot to win. And, you know, Kamala is going to try to protect the blue wall, which is this Minnesota, Wisconsin, Michigan, Illinois, historical voting block for the Democrats. I don't know. I'll be live for like 20 hours that day trying to figure out what's going to happen, because all of our portfolios, all of them, no matter what you own, the next day will be impacted by whoever wins.
Okay.
Yeah, I mean, I don't know. Your voting, the way you vote is very, very strange. You can vote early. You can send it. I mean,
you can vote without an ID.
Yeah, I'm
in Belgium. Okay, in Belgium, like I voted in Sweden. It's impossible. Like you go in, you have to ID yourself. They very seriously check it. It's
and one day, and that's it.
Yes,
but that's the thing. I don't understand why it's not a national holiday, right? Give everyone one day every 4 years. That day you do not have to go to work. You go and vote instead of like having this whole. It's crazy. I mean, voting should be very, very easy, simple, secure. You go. It's a national holiday. You go. You vote.
Bro,
There's
there should be an app.
or whatnot.
There should be an app you download on your phone, made by the government, and you just vote everyone on their fucking phone, dude. Like it's
just
like
I agree with you and disagree with you, because like if the app gets hacked.
Oh yeah, but like, it shouldn't get hacked. Because think about it. There's always
this is why they do it. Even in Sweden, they do it on paper, and then they video the people who count it, and it's like organized that it's basically done in a the same night.
I don't do it on paper. I do it on a screen. Beep, beep,
no,
beep.
my thing is,
Done.
if everyone's so afraid of paper ballots, mail-in ballots, ballots coming out of nowhere, like that is a risk. The app getting hacked is a risk, but I feel like the app getting hacked is less of a risk, especially if you got Palantir, CrowdStrike, you like, or maybe not CrowdStrike, but you got a lot of, these guys protecting
blockchain, blockchain.
Okay, we're not gonna use blockchain, but like, I feel like it's just way more reasonable to have less technical issues with an app, since everything's integrated, versus literally counting physical ballots. Like, what is this, 1927? We're counting physical ballots? Like, this is ridiculous.
I think that there's a reason why they do it on paper, or why
there probably is, but I mean, no. So I agree with you guys. So outside of Trump and Kamala, what else is the bear case for Tesla 2025 to stop Vince from doing his options move? Can you think of anything else?
Maybe China.
I feel like they're doing
China
great.
risk.
Because listen to this.
Yeah, they're doing great. But if China is like, Taiwan seems pretty sexy today, let me. I don't know, because let's face it, China's economy is not doing great. So I don't. I mean, you never know with them. But
what if Trump wins and he gets rid of the EV tax credit? What isn't that bad?
I think
would
Elon
he do
wants
it to
him
his
to.
BFF Elon Musk.
I think Elon wants him to. Elon never wanted this tax credit. If you guys,
that's bullshit. What do you mean Elon never wanted the?
He publicly came out against it. He said, I think on a conference call, he said on TV interviews, like, don't vote this through. And I think that it would hurt the competition a lot more than it would hurt Tesla, because all the other EVs would.
Yeah. Okay.
Like, you're saying Elon doesn't want an EV, a $7,500. You think that's a good? You think just for the competition reason, Elon is against it?
I mean, he came out against it, and
no. But he added But he added an extra thing. He added you should also remove all the incentives for the gas, oil and gas.
That's also true. That's
true.
also true.
Yeah.
It's never going to happen. Let's be honest.
Okay,
I'm not so afraid of that incentive going away.
Yeah, and I don't think Trump's going to do it. I don't think he's going to get rid of it. Like, well, what does he gain from getting rid of that? Like,
Okay, he wants to be competitive, so they'll do whatever they can to be competitive, especially against China. So yeah, but yeah, China is still a risk. I mean, Taiwan, this little island, is in a strange spot.
I have a question. Do you think that, okay, let's say China attacks Taiwan, and they have seen that the Western reaction to Russia attacking Ukraine was sanctions, not trading with Russia, and China would get the same treatment?
Worse.
Yeah, I agree. Like worse. So even if militarily Taiwan doesn't get help, but just the West saying like no more business with China, no chip sales to China, no like apparently the chopsticks are made in the USA. I read something like that. So no more chopsticks to it's true. I read an article that it's like the irony of the fate that everything in the US is like it says made in China, and then when they eat with the chopsticks, like it's a big percent of the chopsticks is made in the US.
I'm about to ask ChatGPT, is that the case?
Yeah, it was a few years ago. So yeah, but so if their economy is already failing, like
yeah, you're right. It's all the US. Georgia makes all of them.
Really?
You're right. So you're, all right, go ahead.
So imagine that hit. No more chopsticks to China. I mean, I'm sure they would solve it, but so
is that did you lead up all of that for that punchline?
No. But my point is, like, I think that the fact that the economy is not doing good, it's like it's more like it makes it safer, like less likely for them to attack Taiwan, because then being cut off from the West, it would be such a blow.
So that is the rational argument. The irrational argument is that he decides to invade Taiwan to unify the country because the economy is so bad. Because if the economy is bad, people have lost purpose. The only way to unify is to have some new big evil enemy, which is Taiwan.
I mean, yes, spiritually, but then you still have to make the economy work. And who are they? I mean, they are the factory of the planet. Like who the F are they going to sell their products to? If like Russia, North Korea, like the new alliance.
That's a great point. Who the hell are they going to sell if they invade Taiwan? That's yeah.
But sell what?
Exactly, and they're not going to get the AI chips.
The
yeah.
Taiwanese folks, they said if we get attacked, we destroy all our infrastructure. So you invade Taiwan, you get nothing. There's not going to be any TSMC. Nothing is going to happen there anymore. So just for the island, for the sake of unifying China, it just
so
doesn't
stupid,
make.
Dude. Yeah,
it has. Yeah, I don't know. There has to be a political agreement or whatnot.
Okay, so this risk now again, now we're stopping Vince from doing something stupid. So this risk I'm not so worried about.
Well, hold on. Another thing, Vince, is if you sell those puts tomorrow, you're not going to get the best premium because it's going to be up 12%, right?
Yeah, but I'm thinking to sell like short-term calls against it. So to make it's like the opposite of a poor man cover calls. And by the way,
you're going to sell a put.
By the way, on the long, like when the call is so in the money as I'm planning, like you have very little extrinsic value on the options. Like it's basically like it moves with the stock, so it doesn't really matter which day.
I'm just saying if it's about capturing a lot of premium, tomorrow is going to be a horrible day. Like if Tesla falls 10% over the next couple of weeks, maybe, you know, the premium is just way juicier versus selling it tomorrow.
Yeah, it's just what if the rally is up to like 300?
Well, that's the risk.
Yeah,
that's the risk. Okay, what's the other concern you had?
No, I mean, like the only thing I validly see is if Elon misses the 20 to 30% growth, but that also seems very because I mean they're going to be compared to a very low base. Macro should be turning.
New models.
Yeah, new models are coming out. And anyways, Tesla is supposed to be, you know, the AI and FSD company. So I don't know how much the market takes. Because, you know, like when I bought Tesla and then I sold it, I bought it because they were going to make 20 million cars. And, you know, they were going to be this insane car manufacturing company. And then when I sold, it was like, okay, I was wrong about the thesis. They're clearly not going that way, you know? And I'm like, I don't think this 20 million cars in 2030 is on the table anymore. Like, it's not so important how much cars. It's more like, where is Optimus? Where is FSD?
Yeah, I don't think they give a shit about selling 20 million cars. Like,
yeah,
I think they care about selling.
They moved.
Yeah, 50 million rides over 20 million cars.
Exactly.
Yeah, if Elon's wrong on these targets, then I guess that's the risk. I think maybe there's an AI bubble risk, but I don't think there's an AI bubble. But let's say NVIDIA tanks in 2025 because their demand falls off. Does that hurt Tesla? I think that's actually a lot of money's going to leave NVIDIA and go to Tesla because they're going to see Tesla's like the use case of NVIDIA versus.
Yeah, but 2025. I mean, they're sold
it's
out.
not going to happen.
So
Correct. Yeah, it's not going to happen next year.
No, but I don't know. I mean, China is a huge part for Tesla, right? It has been for I mean, without Giga Shanghai, Tesla would be nothing today. Let's be honest. Which on the flip side, I mean, Tesla, Apple, Nvidia, SML, Intel, all of those companies that are huge and very important to China. I mean, they should have a say, I think, in what's on the menu for Mr. Xi next year. But because I mean, if you want to have a successful China, you don't want to have like companies like Apple or Tesla or whatnot suddenly like, you know what, screw this, I'm out of here because you guys are.
What about a tariff war? Could that hurt Tesla? A trade war with China?
It's funny. It like by definition, it cannot really hurt Tesla because they are in China.
Yeah, in
right?
the US.
Like
no, they're in China and they're in the US.
Yeah.
So
they're not importing and exporting in, like, it's not that they make cars in the US and send them there, and not that they make China and send them to the US. So they don't like,
they
it
will
doesn't
have a
matter.
mega factory in Shanghai. They will have a mega factory in the US. They have gigafactories in the US and in Shanghai and in Berlin. And maybe in Mexico if things.
That's not a concern at all, then, basically.
Yeah,
that's fine.
I mean, I mean, I think there are still some things that come from there, like raw materials, maybe. Probably, but no. For the economy, maybe. For the economy, maybe. If the tariffs are like stupid, ludicrous, and just for the sake of putting tariffs on, which will not always work out, because then things might get more expensive in the US, and then it's like counterintuitive and just doesn't make sense.
So let's turn this around. What are your guys' prediction for the stock price, like the next 2-3 months?
I think end of year, dude. Tesla. I mean, given these earnings, and if we get into a melt up, I feel like 270 should not be crazy to revisit that 52-week high. 300s, if things get a little wonky, yeah, maybe we can get up there. But I think 270 is not crazy. I know there's not like this crazy catalyst left for Tesla, but I'm just assuming a melt up. I'm assuming we get 2 more rate cuts, and S&P is closer to 6,000. Yeah, I could see the entire market just melting up, and Tesla, as a result of that, closer to 270, 300, 250, 270. Yeah, I agree with Siddharth. That's probably a more accurate range for it.
Yeah,
but I don't think there's any more catalysts left.
This year, no, not really.
This was it. This was the biggest catalyst today.
Yeah. And yeah, maybe the rate cuts 50 basis points or not. And the election is probably.
Yeah, I was going to say.
I forgot Trump. Yeah, I mean, to be honest, if Trump wins,
catalyst.
maybe 300 is on the table. Yeah.
But on a daily, we're now filling that 10-10 gap down. And then, maybe we should try go over the 260 or something. I don't know, in the coming weeks towards the end of the year. Could be. But overall, a much better quarter than what I expected. And I think many expected, which is why the stock is up 12% right now. But interesting.
Yeah, I'll keep you guys
just
posted.
Buy shares. Buy one share,
but
then.
I know. I don't have the money on the account, so this is like a really good workaround. That's why it's so.
I would just wait, Vince, because I don't think I think you could get better premiums, unless you think it's running to 300 soon. You know,
I haven't made the decision yet, and I need to sit with my Interactive Brokers tomorrow and like do the different calculations of like this and that. So we see. Yeah, we see what happens.
All right. I think that's it for us. Thank you everybody for joining for the past 3 hours. Neil and Vince's YouTube is in the description, so please make sure to follow them out on YouTube as well. We'll be back in Q4 2023, probably in February, all three of us again. And we've got a bunch of other earnings coming up, so you guys are welcome on the channel for Amazon, Microsoft, whatever. So you probably will see them again next week. And we'll keep going from there. Congrats to Tesla shareholders. 240, not too bad. And now we just got to keep going.
Yes, sir.
All right,
Awesome, guys.
that's it. Thank you, everybody. We'll see you guys tomorrow on the Market Open. Good night, everyone. Bye-bye.
Bye-bye.
Ciao, ciao. Good night.